Good morning, everybody. Welcome back to the channel. We are back on another episode of The Market Open. It is Friday, November 15th, 8:47 a.m. And oh boy, do we have a lot of stuff to talk about today on the show. Yesterday, if you were part of the market close, it was one of the craziest market closes that we've had in a while. And we really didn't even have that many earnings. We had a couple companies that had earnings, but the news that broke after hours yesterday from all different angles was a lot. And one of those big news had to do with Palantir, which is obviously a stock that we cover a lot. And so we had some market momentum there, and we're going to talk about what happened with Palantir yesterday, along with all the other things that happened. 13 Gs and 13 Fs are officially out pretty much for every major hedge fund and celebrity investor. And so we're going to be going through that. Bill Ackman and Warren Buffett made some pretty interesting moves yesterday that we have to talk about because that's very interesting. And today, we already have retail sales data. I forgot we were getting retail sales data this morning. We got retail sales data 18 minutes ago. And so we're going to be talking about that. On top of that, we got some headlines this morning that are very important. We'll go more in depth on them in a little bit, but SpaceX is now raising at a $250 billion valuation. Why does that matter? Well, I know some of you are SpaceX private investors. I have some friends that are SpaceX private investors. A, your private stake is being worth more. But B, for those like myself that are not invested in SpaceX, Rocket Lab, stock's down about 3% of the pre-markets, but it does show that the TAM for space is growing, and maybe that also will help a company like Rocket Lab. So we got to discuss that. And here's something you guys haven't heard yet, because it hasn't been posted anywhere. I haven't posted it on Twitter yet, but I'm going to be posting it in a little bit. Someone sold out of Palantir. Someone big sold out of Palantir, and we will be discussing who sold out of Palantir and go into all of those details. All right, we are back Friday morning. Thank you, everybody, for being here at the end of the week. Thank you, everybody. Katie, Sith, Kim, Tony, GE, Walt, good morning. Ryan, I'm Beneficial, Top Dancer, FF, Blake, Stanley, Gatekeeper, Missy. Thank you, everybody, for being here. Julie, Nolan, Tony, Deacon, all across the world. Thank you, everybody, for joining me for the next couple hours. Let's get into the market open. So let's start off with a recap of what the hell happened yesterday after the bell, because we had a lot of things going on. So here's a kind of 10-point recap, and then we're going to go deeper into all the stuff we got going on. First of all, Palantir, I'll go deeper onto this, but they have informed investors that they are transferring from the New York Stock Exchange to the Nasdaq. This matters a lot in terms of their ability to get included into the Nasdaq 100 QQQ ETF. That stock, Palantir, was up 3% after hours on this news. We'll talk about that in a second. Tesla is up today in the pre-markets, was down 7% yesterday because the Trump administration is likely taking away the $7,500 EV tax credit. And guess what? Elon really doesn't care. So we'll be talking about the market's potential mispricing of that news in comparison to the long-term potential of what Elon thinks. Bill Ackman bought 435% more into Nike. He has 16 million shares. I do not get this one at all. Maybe some people in the chat can help me understand this. I mean, I have a couple of theories, but I really don't get it. 16 million shares now of Nike. Warren Buffett sold 96% of his Ulta, and now he has a $550 million stake in Domino's. Hims was down 25% yesterday because Amazon started competing with them. Hims is actually up about 2.25% in the pre-markets right now. Oklo and ASTS, two popular stocks that are pre-revenue, they were up triple digits year to date. Oklo is down 10% in the pre-market. ASTS is down 11% in the pre-market. So both of those had earnings yesterday. Decent earnings in terms of progress they made, but overall not enough for the market to be excited about them. Bezos is done selling Amazon. He sold 16 million shares. He's not selling anymore. Amazon reached an all-time high. The Nasdaq, which is actually pretty damn red in the pre-markets, the Nasdaq has had its fourth red day in a row as of yesterday. The QQQ and the S&P. Qs are down 1%. Again, that's a big move for the Qs in the pre-market, and the S&P is down about 0.5%. So we'll be talking about that. And then finally, we'll talk about Jerome Powell yesterday. He said, I quote, "The economy is not showing any signs that we need to rush into lowering rates." However, that changed the probability as soon as he said that in terms of getting a rate cut from 70-30. Wow, look at that in real time. 55-45 for December, folks. 55-45. Yesterday was 60-40. Now it is 55-45. Investors are getting increasingly worried that December is not going to get a rate cut. We did see CPI and PPI go higher yesterday, which means for the first time in over a year, inflation is reaccelerating on the core metrics of CPI and PPI. Maybe investors are getting a little scared. That means that we're not going to get that coveted rate cut going into December, given that the market is priced for that rate cut going into December. I still think we're going to get it, and I'll explain why in a bit. I think it has to do with the labor market more so than anything. But those were the big headlines that we had yesterday. As you can see, a lot of craziness that was happening in the after hours yesterday. And then on top of that, although the markets are down today, S&P and the Qs are significantly down, like a 0.5% move on the S&P and a 1% move on the Qs. That's a lot. IWM also is down about, well, IWM is slightly green, 0.04%. The one thing that's up is Bitcoin. Look at that. Bitcoin at 90,000. I'm actually very surprised that Bitcoin's at 90 when the Qs and the S&P is down. Again, Bitcoin kind of trades like a growth stock. So having the Qs down and Bitcoin go up, you're seeing a little bit of rotation potentially into crypto assets as more and more people are starting to think that Bitcoin is the safe haven. We also have a ton of updates on Bitcoin that we'll be discussing as well throughout the entire show. Okay, let's start with retail sales data. Yes, so October retail was 0.4% versus 0.3% expected. This is very good, but I think markets are down on this news because of our good old friend, inflation. It is actually kind of really weird. Like, you would think that, all right, people are spending money. That's very good. US retail sales data is a gauge on how many people are actually spending money in the United States of America. This is the fourth month in a row of positive retail sales data, and it is 2.8% year over year, which is the highest in a couple of years. So retail sales data in the U.S. increased 0.4% month over month in October 2024, following an upwardly revised 0.8% gain in September. The most increases of sales were at electronic stores, auto dealers, food and services, drinking places, building material and guard equipment, non-store retailers, general merchandise stores, food and beverage stores, gasoline stations. So you could argue, like, you know, the bulk of the economy saw some increases in sales. Sales declined at miscellaneous store retailers, furniture stores, makes sense because housing's down, sporting goods, hobby musical instruments, and bookstores. I don't know if books are going to be around in 50 years. Okay, that's being hyperbolic, but like, I think people listen to audiobooks or podcasts more than actually read books. So that actually makes sense to me. And then clothing. So we'll see this probably in Walmart and Target's numbers next week when it comes to apparel. Target actually increased apparel sales 2 quarters ago. So we'll see if that continues to stay elevated. So overall, people are buying stuff, right? People are buying stuff, and that's good. That's not bad. X auto, it was negative. Correct. If you take away auto, it was negative. So there's two ways the market could be interpreting this. If you take away auto from the retail sales, you get negative. That's bad because theoretically more chance of recession. People aren't spending that much money. That's not good. If you include auto, because that is part of retail sales overall, you've got too much spending. And now that J-Powell says, I mean, one of the questions J-Powell was asked at the conference yesterday was, hey, economy's booming. This is going well. This is going well. This is going well. Why are we cutting? And J-Powell's response was, well, the labor market is weakening. And so that's enough of a response right now, I think, to hold people over to be like, okay, we get why you're cutting. But the general gist, and we're seeing right here in the Fed probabilities, is that we shouldn't be cutting. This number was 80-20. 80-20 on Monday for a December cut. It's 55-45. These tend to not be wrong, by the way. I mean, the Fed futures tend to be pretty accurate. Even on the 50 versus 25 back in September, it was kind of 50-50 on 50 or 25. We ended up getting 50, but like it usually it tends to kind of signal closer to the meeting what's going to happen. And right now it is a toss-up on if we're going to get that rate cut. So there might be an argument that says people are spending way too much, and it's not helping that we're going into Q4, which is the highest time to spend, right? When it comes to holidays, and that potentially could keep inflation around for longer. I did not think a couple months ago inflation, given inflation was coming down aggressively, would still be a concern. But if you look at it historically, I mean, even Volcker thought they had solved inflation, and then they actually didn't and had a resurgence. I don't think we have an aggressive resurgence, but we have been saying on the show, to go from 170 to 150 pounds is easier. To go from 150 to 120 is harder, right? Because as you get skinnier, it's just harder to burn off more fat. That might be something we're experiencing right now. Is that a reason to delay a rate cut? Do we think inflation is going to go all the way back to 3.5%, 4%? Right now, we're at 2.6. I don't think the Fed thinks so, given how J-Powell was talking yesterday. And I know he had to calm people down by saying we have no reason to cut anytime soon. But he also said the labor market is an issue. And if we don't cut and the labor market continues to decline, given J-Powell himself is saying that it's weak, I mean, you really risk the chance of a recession, and there is no landing at that point. Or if anything, there's a hard landing. So I think J-Powell is thinking of it from multiple angles. And ultimately, when we get November data for CPI and PPI, we're going to have a much better understanding of what the market is going to be pricing in when it comes to those rate cuts. Okay, cool. So that's what we got in the context of some of the macro stuff and retail sales. Let's talk about, as Lena says, Palantir to the moon. Palantir. What was really funny today, I was on Reddit, on the Palantir subreddit, and it was really funny, dude. Someone asked the question, and the question was like, is it too late to buy Palantir? And someone responded. They were like, oh, no, it's not too late to buy Palantir. The market's closed at 4 p.m., but you can buy after hours till 8 p.m. I was like, that's the first time I was like actually laughing off something I saw on Reddit. I was just like, yeah, it's not too late. No, you can buy till 8 p.m. You're good. The market's closed at 4 p.m., but it's open at 8. That was hilarious to me. But is it too late to buy Palantir? I don't think so. I think this is a long story. And yesterday, Palantir proved that this story is not ending anytime soon. So yesterday, Palantir informed investors through a press release that they are transferring from the New York Stock Exchange to the Nasdaq. Okay. Now, the Nasdaq 100 is an index. On this index, you have primarily based tech companies, and the Nasdaq 100 tracks the biggest tech companies in the world: Microsoft, Meta, Amazon, Broadcom, Nvidia, Google, Tesla, etc. So now that they are part of the Nasdaq, and they will be on November 26th, they have the eligibility requirements set to be included into the QQQ ETF, which tracks the Nasdaq 100 index. Why does that matter? The Qs have 318 billion in AUM. This year alone, they were the fourth largest ETF in terms of inflows with $27.8 billion added. That is a very, very big deal. That means when investors are saying, hey, how do I get allocation to technology, which is what the QQQ ultimately tracks, they're saying the Qs. That's like our go-to source to go long on tech. I think for everyone who's bullish on tech, if you don't want to pick the Nvidia, the Amazon, or Microsoft, it is a very easy thing to just pick the Qs and go to sleep for a decade. And if you believe in technology, you believe in America, the Qs will probably have appreciated by the time you wake up. The QQQ this year is currently up. And let me put in the chat if anyone's long the Qs. I would love to know how many people are actually putting a decent amount of their portfolio in this ETF. 26% year to date. Over the past year, it's up 31%. Over the past 5 years, it's up 150%. So you could have bought the Qs in 2019 at 202. You would wake up today at 508. You'd probably be very happy with that investment, primarily betting on US technology companies at the end of the day. So that's what we got in terms of Palantir. Now, why is this bullish? Let me be very clear. Palantir is not Palantir is not part of the QQQ ETF yet. But if they get included into the ETF, which might take, a couple of months, there's a number coming out that it's December 20th is the next rebalancing. I don't know if Palantir gets included at that point. They have all the other requirements. They need to be on the Nasdaq exchange. That is now officially happening. Maybe it happens mid 2025, early 2025. The point is, shorts are not having an easy time because Palantir being added to the S&P 500 and the Nasdaq is not good for people that are thinking that they want to short the stock. Now, I'm not saying that means that Palantir is just going to keep going up or that hedge funds are going to keep buying it, institutions are going to keep buying it. I'm just saying it's harder and harder to see a ton of bearish arguments just from a pure macro perspective when so much money is flowing in to Palantir. To give some context, Alex Karp sold $109 million of stock 2 days ago, and the stock is higher than when he sold. Every time Thiel or Karp have been selling, they cannot catch a good price because the thing just keeps on going higher and higher. And it's hard for them at this point to time it. And I think it's hard for them to time it because there's just so much demand for the stock. And there's so much demand for people that ultimately want to get access and exposure to Palantir. So look, could this move be faded? We saw a 3% pop yesterday. We're up 2.5% in the pre-markets. Could that go away today? Could that be sold off over the next couple of weeks? 100%. That is very possible. I'm just saying long-term for Palantir, in its 5th year of being a public company, to be added to that index and to be added to the S&P 500, very, very bullish. And overall long-term, that is not a bad thing in the context of Palantir. Rodney says, IVV and QQQ used to be my entire portfolio for years. That makes sense. Bill has $1 million in the Qs. I love it. A lot of you, 80% of my portfolio is in the Qs. Tim says that. Raul has a bit of QQQ. Yeah, a bunch of you guys are in the Qs. And it makes sense. Ultimately, going long technology is not the worst idea in the world. Okay, so that's what we got in the context of Palantir. We'll talk more about them. TJ will be joining the show at 10 a.m., and we will go through his option strategy. He sold all 24,000 shares of Palantir. However, he is long Palantir via leaps. He did this to manage particular parts of the portfolio, free up some cash. You guys know he was stuck in some ugly covered calls when it came to Palantir. So we're going to be talking through that strategy, and I think that'll be a really good learning episode of how to navigate a position that is underwater and covered calls, but to also be able to free up some cash and still get exposure to the stock if the stock were to go higher. Now, he is not the only person to sell Palantir. Someone else sold Palantir. Let me bring this up. You guys probably have not heard about this. Well, put in the chat if you guys know who I'm talking about, because I've seen no one talk about it. I found out this morning, and that is why I'm bringing it up right now. Let me just bring up the website to show this. This is someone who has loved Palantir for a long time. He has even done an interview with Alex Karp, if you guys remember. And he has sold 94% of his overall position And this was reported yesterday. Let's see if this one pops up. Let me change the source date. Oh, I have to increase this. Okay. There we go. All right. What are you guys saying? Dan Ives doesn't own Palantir. He's an analyst. I don't even think he's allowed to own Palantir. We'll talk about the SpaceX news as well. All right. No one really. I think there's only one person in the chat who got it. No one knows. It's not Chris Patel. Chris Patel still has one share of Palantir. He's up too. He bought it at $30, dude. Chris Patel is doing great on Palantir. It is Stanley Druckenmiller. He has sold 94% of his position in Palantir. As you can see right there, he now has 41,000 shares worth about $1 million. He did own 769,000 shares at $20.45 in Q1. He has now sold 728,000 shares of Stanley Druckenmiller. So, not of Stanley Druckenmiller, of Palantir, but Druck sold. So why did Druck sell? I mean, look, at the end of the day, I don't think this is that big of a deal because, quite frankly, Druck's sold NVIDIA at 900. I'm not saying Palantir is the next NVIDIA. I'm just saying that Druckenmiller is a guy who takes profits, and he himself is very humble, and he'll say that it's very hard for him to catch the top. And recently on a podcast, he said, I tried to sell NVIDIA at the top, and there was no top. So he kind of missed out on the run from 800, 900 to where it's at right now, which would be 1,500, technically 80 to 150. But he made a good gain because he bought it at 150. So I'm thinking, if I'm in his shoes and I'm managing as much money as him, he bought Palantir at $20. Stock has tripled in about 5 months. At some level, with the amount of money he's managing, he's probably thinking, this doesn't make sense. I should take some profits and I'll get back in when it comes lower. Now, he said the same about NVIDIA. That hasn't happened with NVIDIA. So I don't know if he's going to try to time it the way he's doing it. The thing about Stanley Druckenmiller is that he did an interview with Alex Karp a long time ago. If you guys haven't watched it, it's a very good interview. He has believed in Palantir for a very long time. Stanley Druckenmiller believed in Palantir when they were at $8. He ended up selling them at $8 as well because, unfortunately, right, he couldn't allocate the capital at the time, couldn't keep the money there. It was there for 2 years. A lot of us retail investors know how much that sucked, and he manages billions of dollars. There's the interview right there. And so he had to reallocate. And so he ended up buying NVIDIA at $150 or $15, which was a great deal. He got back into Palantir at 20, and now he's out. So ultimately, at the end of the day, I think that this is not that serious in the context of the moves that he's making because no one's perfect. I don't think he expected it to go to 60. We don't even know if he sold at 60. He could have sold at 29 or 40 or 45, but we'll get more details over time. But as of now, it looks like he is out of Palantir. What's also funny is all these hedge funds and 13Fs and 13Gs that I'm going through Palantir right here, 2.69% of the pre-markets, none of them, and when I mean none of them have added Palantir. I'm talking about the Bill Ackmans, the Howard Marks, the David Teppers, all these different people. Like, it's all Max 7. A lot of them have reduced Max 7. We'll talk about that. It's no Palantir. What's also funny is Palantir is institutionally owned by 53% of investors now. So 47% retail, 53% institutional holdings. We found that out yesterday. That's really bullish, but none of the celebrity names outside of Renaissance Technologies, which now Palantir is their biggest holding. And I think they sold 1 million shares in Q3 as well, but they have so many shares. They have 40 million shares, so they still have like a very big position. They're the only big celebrity investor I know that actually keeps Palantir. So it's really interesting kind of how Palantir is continuing to go up as one of the best stocks in the S&P 500, one of the top performing tech stocks of the year, but the celebrity investors aren't investing in it. And so this is a win for retail and I guess for the institutions that are getting part of the story. But I guess a lot of investors in the hedge fund space are just not believing in it, which is okay. But that's kind of what we're seeing right now in the context of Palantir. Amit, isn't the combination of large institutions selling big tech and buying companies like Dollar General inflationary? Yeah, you can make the argument for that. So I think there's a lot of nuance to it. To kind of piggyback on what Gene is saying right there, we are seeing a decent amount of rotation outside of big tech. So we are seeing people also add to big tech, but here's a good summary of this. This picture right here kind of gives you the overarching thesis of what we're looking at. So if you look at Apple, you can see lots and lots of firms exited Apple. 100% of firms exited Apple. There's 2 firms that added to it, but a lot of them exited. Tesla, we had a decent amount of people add at 260, but you could argue a lot of people sold recently. This only tracks up to September 30th, so we don't know exactly how many people added or sold or in the past couple months, but it gives you a kind of decent overview of what the buying activity was like in Q3. Amazon, you can see a lot of firms sold Amazon. They were probably upset that Bezos was selling. Bezos now is done selling. NVIDIA, you had a lot of firms sell. Meta, you had a ton of firms sell, and it makes sense. These stocks, same thing with Google, Microsoft. A lot of these companies are up so much year to date that for a hedge fund portfolio manager, you've got to be able to take some profits and take some wins. And as a result, we're seeing a bit of that rotation. Now, that rotation, where is it going? Well, one could argue it's not just going to stocks. It's not just going to small caps. It's not just going to crypto. It could be going to money market funds and just chilling out for a bit. Money market funds increased by $81 billion yesterday, 6.67 trillion. We are nearing, we are at an all-time high. If we get another 40 billion, we're going to be at $7 trillion in money market funds. And what's incredible about this is as of November 14th. Trump got elected on November 5th. And so it's been 9 days since Trump has been president, and we've seen a massive surge in the markets that's starting to fade off a little bit here and there. But still, money increased into money market funds. And I think the money that went into the markets was cash that was probably in people's Schwab accounts, Fidelity accounts, Robinhood accounts that entered into the market. But net funds probably left either the market or different asset classes and went into hiding in money market funds, even though rates decreased this week as well. So this was with Trump getting elected, and this was with rates decreasing. Now most yields on your Robinhood account or your SoFi account or your money market funds are closing in on 4.25%. Which is good at 4.25%, but it's not as good as some of these other stocks in terms of how they've appreciated. So what do we take from this in the context of investors? First of all, I think following celebrity hedge fund investors, it's fun, but you can't really get a ton of signal from it because at the end of the day, we are managing at the most some retail investors, millions of dollars, more people in the six-figure amount on average. These guys are managing tens of billions of dollars. And so it's very hard to kind of make moves based on what they're doing. But I think in general, we can see they're selling off tech. They're diversifying into some more safer moves. Some of them that are adding to tech are adding to very undervalued tech. For example, a decent amount of funds added to Tesla at around 260, either before the robotaxi event or right after earnings. Now, does that mean they sold these positions? Maybe. But if they held on to it, they probably took some of their Microsoft and added to Tesla when they saw Tesla was trading at more depressed levels from something like a Microsoft. So I think that's kind of what we take from it in terms of where the rotation is, where it's going, and where that money could be going over the next couple months as rates potentially come down. Having said that, there are two moves that are a little bit confusing to me. So let's look at this, and then we're going to hear from Ron Barron on CNBC talk about Tesla. Warren Buffett bought $500 million of Domino's. Now, here's the theory on this that people have been floating around. This is not my theory. It's what I've gathered from the comments, and let me know what you guys think about this. In a recession, people have to buy cheap food, and they're not going out too much, and, families are ordering in food and like special deals, get two large pizzas, get a free stack of breadsticks. Therefore, you buy Domino's. That's the thesis going around. I don't know if that's the best thesis. Domino's did have a nasty fall in July, and it did become attractive. Domino's up about 4% in the pre-markets. If you look at it year to date, fell from about 533 all the way to 404. If you look at the financials, it's a decently growing company with a product that you could argue is recession-proof, which is pizza. And so if Buffett bought kind of in this range right here, then maybe it's not the worst buy in the world. And that's kind of why people are thinking right now he just wants free pizza. Maybe that's the case. He also, Buffett bought Dairy Queen as well. So Buffett is one of those people that tends to buy these types of American companies, and maybe he's continuing with Domino's. Second big thing on the headline, Bill Ackman bought 16 million shares of Nike, or he bought 12 million. Now he has 16 million in total. I really do not understand this move. You could argue Nike's undervalued, but at the end of the day, Nike is a clothing company. It's a household brand. Is it a household brand that will survive over the next 10 years? Probably. Will it return like amazing returns? I don't know. He sold a lot of Google, not yesterday, but in the previous quarter to finance Nike. And then I think he added net new funds to be able to continue to buy Nike. Nike stock, not really reacting too much. Let's see in the pre-markets. It was up slightly yesterday, up 1%. Nike currently, it's up 1%. No one cares, right? No one really cares that he bought Nike. You could argue China recovery and stimulus will be good for Nike. You could argue that it's oversold over the past year, going down 30%, therefore it'll come back. And you could argue that Bill Ackman probably played an instrumental role in appointing the next CEO, and he has a lot of confidence in the next CEO, and maybe that's the argument. But 16 million shares of Nike. You could also argue he gets a dividend. He gets $21 million a quarter in dividend, but I don't think Bill Ackman's buying it for the dividend. I think there's a broader thesis here that none of us understand, or at least I don't understand. And as a result, he is, engaging in Nike. You hate Nike because of the $100 hoodies. No, I don't hate Nike. I'm not a net buyer of Nike. I'm just saying Nike in general is a very interesting choice in my opinion. Lewis, thank you for the $5 super chat. Thanks for what you do, Amit. You are to me what Carp is to you. Your boy Lewis. We will recreate the Carp Amit picture at the Palantir party soon. I love it. When we have a Palantir party, hopefully next year, we will definitely recreate that picture. All right, so those were the headlines from 13Fs and 13Gs. Let's get into Ron Barron, legendary Tesla investor. He put in $400 million a decade ago, and that is now worth, I believe, $5 billion roundabout. Let's listen to what he has to say about Tesla and ultimately why he is still bullish. Company. By the way, SpaceX, Elon Musk's space company, is raising at a $250 billion valuation, up from $210 billion. So we'll talk about that and what that means for the funding of overall space companies.
Buddy, our next guest is going to be weighing in on Tesla. And, I just wonder what you think as you are watching all of this, because Tesla and SpaceX are your two biggest investments in the Barron funds. This has been a bit of a whirlwind.
Those two investments represent about 15% of our assets, about 10% for Tesla, 5% for SpaceX. I watched this with puzzlement, everything that's happening, but I think that one element that is going to be important for Elon is that he will be able to, he understands where there's unusual spending that's much greater than it should be, and how that can be corrected. Pretty easy, actually. You have a lot of cost plus contracts. So they can be changed to the way contracts work for SpaceX, where they take the risk instead of the government. So cost plus contracts are anathema to operating.
I'm sorry, what was that?
Anathema. What's the word? They're a bad thing. Cost plus contracts don't work very well for the person who's contracting.
I'm sorry, Ron. I can't hear anything you're saying. I'm going to move a little closer. I know this is going to screw everything up, but you stay where you are. I'm moving closer. Okay.
Oh, I like being closer to you.
So say that again.
Becky's such a professional, bro. She's absolutely such a professional.
Okay, so if you have a cost plus contract, what that is that you agree to do services for the government. They give you a price, and then you go out there and find a lot of subcontractors to do this work for you. The subcontractors, the longer they take and the more they cost, the better it is for you, because you're getting 12% off the top as pure profit. Just as a prime contractor, you want things to cost more. So for example, the government was sending a program. They want to send people back and forth to the ISS, International Space Station. So they give two contracts, I guess about 10 years ago. One to Boeing for $4.3 billion. A year later to SpaceX for $2.1 billion. And SpaceX has since been back and forth 40 times. Boeing got there once and they couldn't get their guys back.
Right.
So we had to go rescue them. And that contract now has cost $18 billion. It's going to cost $98 billion or $88 billion. It's supposed to cost 11. And therefore, they benefit by something taking longer and costing more. SpaceX, if something goes wrong on a Friday afternoon at 4:30, people don't go home till it's fixed. The other places, 4:30, let's get out of here. And they don't care because it's the government's money, not theirs.
So your point is that
get rid of cost plus contracts.
The efficiency that he puts in his businesses, you think he's going to put into Washington now
Yes,
too?
and get rid of cost plus contracts. Yeah. That's number one. Number two is that if you want to go back and forth, you want to go to Mars and you get 1 million people up there, you got to launch regularly in your sites regularly, like a lot of times every day. And if you have to go get permits every time you launch, airplanes don't have to get permits every time they launch, every time they take off. If you have to do that, that really slows you down. You can't do it. So basically, there has to be change in regulations also. So there have to be more reasonable regulations than are in place right now. And you have to have different, this cost plus contract stuff has to go.
So you've been a longtime Democrat. You've been pretty outspoken about that, but you're also a longtime supporter of Elon Musk's. What do you think of the election results and the government that we're going to be facing?
I think that he had similar views to mine. I don't feel like I'm a Democrat anymore, but he had similar views to mine, and for a long time. But I think that the Democratic Party has been taken over by unions, teachers unions, UAW. I mean, one of the things that was really interesting is that they had an EV summit at the White House. Everyone's been talking about this a year or two ago. And in that period, they had the leading people for electric cars were invited to the White House to meet with President Biden. and Musk was invited initially and then disinvited. And the person who was praised for leading the way and in the conversion was Mary Barra. I love Mary Barra, but Mary Barra in that quarter did 29 cars, 29 electric cars. We did 300,000. And she was the one who was invited, and she was the one who was praised as the leader in this conversion from gasoline cars to electric cars. So that's because the UAW said, I don't want Elon Musk in the White House. And so it's a lot of these interested parties that say that, no, it doesn't work for me to have someone who's not union. The reason UAW has been unsuccessful unionizing Tesla's plants is because the people in Tesla's plants are becoming wealthy because they're shareholders in Tesla stock. Same thing for SpaceX. So you can't unionize people if they're doing great where they are. Last year, there were 5.8 million people. 5.8 million people applied for jobs at Tesla and SpaceX for 30,000 jobs. 5.8 million people for 30,000 jobs. Tesla might have 150,000 people and SpaceX probably 15,000, but they had 5.8 million. To get the best people, who do the best. And how do you take people like that and make them into a union where they're just taking something off the top and it's a job that's not that interesting?
When did you decide that you were no longer really a Democrat? Has that been over the last several years?
A lot of policies they have. I'm an independent. A lot of policies that they have I don't agree with.
Just anti-business policies, anti-growth policies. What are the
anti-Israel policies?
Anti-Israel policies. Yeah.
So I don't really understand where they came from. The inclusion policies. I think that if someone is really talented and work really hard, they should get the benefit from that. And the policies of Democrats, if someone's not doing well, they want to say, okay, we'll lift you up. I'm fine about giving people opportunity. I'm not fine about taking something from someone who's worked really hard to achieve what they have and taking it from them and giving it to someone else.
Okay, you are an investor. Your top two holdings are Tesla and SpaceX. You also have a holding in X.com. And Elon's got a pretty large role in this new incoming Trump administration. Do you worry at all as an investor that that's going to take more of his time, or do you think his companies will benefit because he's able to be there?
This is an advisory role. So I don't think right now he's doing a lot of advising. I don't know how active he is in choosing the people who are being placed in these roles. But he was supposed to come. We had a funny bit planned. I was telling you about this before. We were initially going to do a Saturday Night Live Open.
Here at the Barron Investment Conference today.
Yeah. And then I told him about this. He said, well, why don't we do 30 minutes about talking about the future instead? I said, okay, great. And then they called yesterday and said he can't do it. He's in Mar-a-Lago. Can't arrange it. Can't leave. Can't come in. Can't get the sheet.
So he's actively involved. We've heard the reports about this, but you've heard it too.
The people in SpaceX told me that he doesn't miss any meetings. Okay. So he comes to these meetings, same thing with Tesla. I don't understand how he's able to do all this.
Yeah, it doesn't seem like there's enough hours in the day.
No, it's amazing what he does.
All right, so that's what you got from Ron Barron here. Ultimately, at the end of the day, you got Barron, who is super excited about Elon Musk and SpaceX, but he is a little curious how he's able to manage that with Tesla. Here's a quick 38-second clip of Trump talking about Elon last night. They were at Mar-a-Lago, and here's what he had to say.
It's of course billions of dollars. Elon Musk, Elon. What a job. What a job he does. And he happens to be a really good guy. You know, he likes this place. I can't get him out of here. He just likes this place. And you know what? I like having him here, too. He's good. He's done a fantastic job. Really an incredible mind, and he's an unbelievable entrepreneur, sort of everything. I'm asking him, what do you do best? And we were not able to figure it out, but it's a lot of things. Rockets are...
So you got Elon working with Trump, playing a very strong role. Actually, Elon, yesterday after the bell, the news broke that he had a meeting with the Iranian ambassador in the United States to try to figure out how can we resolve U.S.-Iran relationships. I mean, it's actually incredible, the fact that he's engaging in diplomacy and trying to figure out. Obviously, I think Elon's mindset is, hey, if the world is more peaceful, that's obviously better for Tesla and SpaceX. And if the Trump administration is more successful, that looks good on Elon. So I think there's a lot of motivations at play here, a lot of stuff that's going on. And that leads us to the conversation around Tesla. So let's start off the conversation right here. This was the breaking news last night. The Trump transition team is planning to get rid of the $7,500 EV tax credit. And that $7,500 EV tax credit, from someone who just bought a Model Y, you guys know I got the Miracle Whip a couple weeks ago, I would not have bought that car without the $7,500 EV tax credit, along with the $2,000 reduction in the United States, in New Jersey. Like, there's just no way that I'd be paying close to $55,000 for a car. Like, I just wouldn't be doing that. So the car came down to $45,000, still expensive, but with the 0% APR, got in $15,000 from trading in my Civic. It became a very reasonable thing to do. But if I couldn't get that extra $7,500, it would just be tough to justify it. It really would. And I think most people are like me, which is that, look, if you're going to buy a Tesla no matter what, that means you're doing very well in life and you've got a ton of money and you're buying a Tesla. But the people that were buying Teslas like that, or the market that Tesla was going after, that you're just doing well, it doesn't matter what the price is, that was 2014, 15, 16, 17. Like, now Tesla's trying to become more mass consumer. And to become mass consumer, you know, not everyone just has 80 grand, 50 grand that they can just drop on a car with no worries. So this is not the best thing in the world, obviously, in the context of Tesla. So here's the bearish perspective. Here's the bullish perspective. Number one, bullish, because Q4 is going to go through crazy. Black Friday on Tesla through Q4, 100%. One of the reasons I bought my Model Y was because I had a feeling that, hey, if Trump wins and this tax credit is gone, like, it's going to be more expensive to get a Tesla. So someone like me that took advantage of that deal, I think a lot of people are going to take advantage of it. And I think Q4 deliveries are going to go well. Maybe Tesla even grows and compounds deliveries 1% to 2% year over year, whereas people were projecting they would do 0% growth. In fact, negative growth from 24 to 2023. So that's one thing that's bullish. Another thing that's bullish, and look, you can either agree with this or disagree with this, but this is kind of the argument that Elon's been hinting at as well, is that this is 4D chess, and that Rivian and Lucid and Polestar and all these other EV companies, there is no way in hell they're going to survive. Rivian can barely get they don't have a gross margin on their vehicles. They haven't had a gross margin that's positive on their vehicles for years. So if Rivian now has another disincentive in terms of getting people into the door because that $7,500 tax credit is gone, well, how does Rivian survive? How does Lucid survive? How does Polestar survive? And if these companies can't meaningfully survive, well, then wait a second. What's going on here, right? If they can't actually survive, then does Tesla have a monopoly on EVs? That is one of the bullish arguments I think we have to explore. That is the kind of 4D chess Elon might be playing here, kind of a little bit of a Rockefeller move. Whereas that if these other companies are gone, not saying they're massive competition to Tesla, but they are some competition, then does Tesla get the bulk of the pie? That's the bullish argument. Now, here's the bearish argument. The bearish argument is that Tesla's not competing with Lucid. Tesla's not competing with Polestar. They're not competing with a Rivian. They're competing with GM, Ford, Toyota, Honda. They're competing with traditional internal combustion engine vehicles. And at the end of the day, if it's cheaper to get a Honda or a Civic, or a Honda Civic or a Toyota Corolla or a GM or a Ford F-150 than a Cybertruck or then a Model Y, Model S, because that $7,500 tax credit is gone, more people just might pick something that's cheaper. Do people really love EVs that much to pick them over gas cars? Now, having experienced it, I love it. And it's hard for me to go back. But that's after I experienced it. And I haven't experienced it for over 10 years, right? So getting people even into the door is a challenge because the price tag already is a little bit too much to get people excited. So I think one of the biggest things here is that Q1, Q2 will have some bad numbers potentially in regards to vehicle deliveries, which is not going to be good because Mr. Elon Musk said that we would get 20 to 30% vehicle delivery growth in Q3 earnings, which is why the stock pumped so much because investors were excited based on that guidance. And so I think we have to weigh that nuance here. I would love to know what you guys think. Is that good? Is that bad? Does that make sense? Ultimately, is that bearish or bullish? Now, here's another bullish point to combat some of the bearishness. The $25,000 to $30,000 vehicle for Tesla, Elon has said will be out by the second half of 2025, the latest. If that's the case, do you really need an EV subsidy, right? 25 to 30,000 is relatively reasonable for most people that want to get a new car. So if that car starts selling like hotcakes, particularly because you don't need the EV subsidy and it's a mid-sized car that the average American can afford, then maybe that ups vehicle delivery sales. And ultimately, that achieves what Tesla is trying to do, which is autonomy. right? So the other bull case that a lot of people have been talking about it, I'm sure a lot of people in the chat that own Tesla believe in this. Like, you're not buying Tesla because they're going to sell millions of cars. You're buying Tesla because no matter how many cars they sell, the people that own those cars will put those cars into a robotaxi network, and those cars will then dominate the broader ride-hailing market via autonomy and FSD. And that is the bull case. And I think Elon Musk would not have endorsed Trump, would not be campaigning for Trump, would not be at Mar-a-Lago every day if he did not believe that Trump would be long-term bullish for Tesla. I mean, if he thought getting rid of the $7,500 EV tax credit would be a death blow to Tesla as a company, like if he thought that was the nail in the coffin for Tesla, there's no way that he would end up endorsing Trump, right? So I think there's a broader plan that he has right here, and that broader plan ultimately has to do with the fact that he thinks autonomy is the vision. All these other car companies are not going to survive with these subsidies, and as a result, if these subsidies go away, Tesla will be the only one standing. Here's Elon talking about it in an interview a year ago when it came to the subsidy itself.
And we don't need the $7,500 tax credit. I would say, honestly, I would just can this whole bill. Don't pass it. That's my recommendation.
What about the support though for the charging network? I mean, there are parts of this bill and no.
No, I mean, do we need support for gas stations? We don't. So there's no need for this for support for a charging network. I would delete it. Delete.
Okay, all right.
I'm literally saying get rid of all subsidies. But also for oil and gas.
If you think about also how this affects your competitors, is that impact how some of your view on this?
I mean, maybe they need it. I don't know. But I think just generally, I'm in favor of deleting subsidies. I mean, when we started Tesla, there were no EV subsidies at all, and gasoline was super cheap. We did not anticipate any subsidies. That came later, and that came the $7,500 tax credit came as a result not of Tesla activity, but of General Motors lobbying for it. So
as you can see right there, Elon doesn't give a you-know-what about the tax credit. I mean, that from that clip 2 years ago, he's basically saying, we don't need it. We don't care about it. The big companies wanted it because GM couldn't get people to buy their cars. Ford couldn't get people to buy their EVs because those EVs are just incomparable to Tesla. And so they lobbied for this. So I don't think Elon has a single problem with what Trump's doing. I think he's kind of excited about it. The market's reaction to it was negative, but ultimately Elon might have a better plan when it comes to Tesla going into the next decade. All right, here we go. Lots of news to cover. Friday, November 15th, 9:30 a.m. Thank you, everybody, for being here. The stock market is once again open. Wake your ass up. Here we go. Tesla opens flat on the day, 310.11, 311 now, down about 0.21%. So we got Tesla a little bit red as we open up the markets. S&P 500 down already 0.5%, 600 to 589 on the S&P. The Qs down for their fifth red day in a row so far, down 1% on the day at 503. We'll see if they close out red to actually have their fifth red day in a row, but the Qs are down at 503. Palantir is up 4% right now. As the market opens, why is Palantir up 4%? For those that are just joining, Palantir is transferring from the New York Stock Exchange to the Nasdaq. That means they are eligible to be included in the QQQ ETF. That is very, very important. It's one of the biggest tech ETFs on the planet. One of the fourth largest ETFs in terms of inflows this year at $28 billion. If Palantir does get included into that ETF, they will have more institutional investors and more inflows getting a piece of Palantir. Palantir right here up about 4% on the day. TLT down about 0.5%. Disney is up about 2%. MicroStrategy is up 2.4%. Applied Digital is up 4%. NVIDIA disclosed that they now own 7 million shares of this company, Applied Digital, on their 13G yesterday. Coinbase is up 1%. SMCI down another 0.5%. Applied Materials is down 10%. They had a decent earnings, beat on the top and the bottom line. I don't know if 10% is necessarily warranted, but all the semis have been taking a hit over the past couple of weeks. Nubank down about 2%. Robinhood down about 0.5% or about 1%. 31.89 right now on Robinhood. You got AppLovin down about 0.37%. Spotify down 1.2%. Carnival Cruise down about 1%. Enphase maybe bottomed at that $59 level, up about 2% right now. Nvidia is down 1.6%. Alibaba, they had a good earnings today. They're down 1%, but they had a pretty decent earnings. Honest is down 1.23%. Uber is up 2%. Let's take a look at Rocket Lab. SpaceX is raising at a $250 billion valuation. Rocket Lab was down 3% of the pre-markets. Now it's down 1%. I think that's net bullish for Rocket Lab, because simply that means that you've got more people that would be interested in the overall space. And you would also have more people that potentially think that Rocket Lab has a larger TAM. So Rocket Lab down 1%. It's going to probably end the week around 20% up, 22%. But it was up 52% at $22.55 right after earnings, now down 1.2% on the day. Oklo's down 16% after earnings. Oklo is down. They had earnings yesterday. Again, pre-revenue company. They announced a ton of deals, but no real revenue, no real actual numbers. That company is down 16.2%. Tesla goes green. Tesla 314. Tesla's actually green right now, which is not too bad. Rocket Lab over the past 5 days is up 16%. So looking like it's going to end the week up about 16% over the past month, up 71%. Currently on Rocket Lab. Tesla 314. The Qs continue to go down. 502 down 1.18. S&P now down 0.61. We're actually seeing some material weakness in those two companies, or those two indices. And then you got Palantir right here, up 5.53%. 63.40 is the all-time high for Palantir. The market is expecting the Qs to allow Palantir into that ETF, and as a result, more investors potentially would be buying Palantir. And that's why we're seeing Palantir get some decent momentum right here. Not bad. Look, I mean, if you're a Palantir short right now, it's tough, dude. It's very, very, very tough, because no matter how much you hate the valuation, no matter how much you think it's expensive, $142 billion now for Palantir. They continue to make moves that allow them to get some momentum, and getting into the Qs. That's a big, big deal. And again, they're not in there yet, but if the market's expecting they're going to be in there, same thing with the S&P 500, they're going to buy it up before it gets in. They're going to think this is a runaway train that a lot of institutions are going to get a part of. They're not really going to care too much about the numbers, but rather the qualitative aspects of being in that index. And obviously that can send Palantir a bit higher. MicroStrategy is up 1%. Disney is up 2.64%. Disney was up 8% yesterday. So Disney continuing some of their strength. Robin at 31.56, down about 2% right here. AppLovin down about 1%. Spotify down 1.6%. Small caps getting hit, down 0.5%. S&P now down 0.65%. And the Qs continue to fall, down 1.18% on the day. Let's check in on the Mag 7. They are all red except Tesla. Tesla's up 1.4. Everything else is red. Everything else is indeed red. So you got Apple that's red, you got Google that's red, you got Microsoft that's red, you got Meta that's red, Amazon that's red. Amazon did hit an all-time high yesterday. Bezos seems to be done selling, but markets are red. Google's down 1.3. Wow. Meta's down 1.7. Microsoft's down 1.2. Apple's down 1%. Nvidia's down almost 2%. Amazon's down 3%. Yeah, that's why the Qs are down 1.2%. Big tech's getting hit right now. Tesla's the only one that's actually holding up on a Friday. The rest of them are all getting hit. Google's basically back to where, I mean, not literally back to where it was before earnings, but getting close to where it was on earnings right now. Where's Palantir? Are we going past 63? Where are we at? We're gonna so 64 is when we ring the bell, folks. We hit 63 a couple days ago, so 64 is when I ring the bell. Let's see if we got it. All right, there's 63. There you go. There's 63. All right, let me check the resistance on 64. Let's check HIMS in a second as well. Palantir 63 or 64 resistance is 64 resistance is not a lot. There's not a wall there. There's 4,000 shares. 4,000 shares at 64. Where it's really not a lot. It's not a lot of shares. If we have 4,497 shares. If we have the volume already 13.5 million, that's a lot of volume for Palantir, even in the first 5 minutes. Then 64 potentially has a shot. Where is HIMS? So HIMS was down 25% yesterday. Wow, HIMS going down another 5%. HIMS is just not getting any love. Why is HIMS not getting any love? Well, you know, a lot of people are arguing. I mean, put in the chat, do you think HIMS has a moat? Just put the word moat. If you think they have a moat, put no moat. If you think they have no moat. If they can fall 30% in 2 days after going up 40% in 3 days, because Amazon says we're going to start competing with you, do you have a moat? I think that's the broader question that HIMS investors have to ask themselves. Remember, HIMS is a $5 billion company competing with a $2 trillion company in the same space. Small caps usually don't compete against large caps in such an aggressive manner. And Amazon has basically said, we are coming after everything that you are going for, HIMS. Look, there's going to be people that don't have Amazon Prime. So you could argue, well, those people could go to HIMS, but there's 100 million people that do have Amazon Prime that now don't need to go to HIMS. And so I'm not the most educated on this company. I have to do a lot more due diligence, but just at a high level, I think that is the market perception right here. And that's why the stock is down 30% currently right now. FF says, curious on who would be selling Palantir currently for the people with conviction that built up their Palantir position for the last few years. Why would they sell now? It's a hell of a question. I think you're right. There's not a lot of people selling. There is a lot of people buying. Therefore, the stock continues to go higher, and retail investors that bought in at $7 or $8 are not really selling as well. Maybe they're taking some profits, but their net positions they're likely keeping, which means the stock just keeps going higher as there's more demand for these shares. Now, Stanley Druckenmiller, if you're just joining, did sell 95% of his position of Palantir. So when you ask who's selling, you got some of the big hedge fund guys that are taking profits. But outside of that, I don't see too many people in the retail community necessarily taking profits. All right, most of you guys say no moat. I'm seeing like 5 comments that say moat. Everyone else is saying Amazon's killing them. Maybe that makes them an opportunity, right? Maybe that dip, if people are wrong about the moat question, gives them a hell of a valuation, or that just means Amazon is, not going to easily allow them to survive right now. So you got Amazon right here down about 3%. Tesla's slightly up. Nike, Bill Ackman did buy 12 million shares of Nike yesterday. The market does not care. Nike's up about 1%. Domino's Pizza. Wow. This was up 10% yesterday. It's only up 1%. Look at that. I guess market doesn't care about what Warren Buffett's doing either. This was up 10% yesterday. It was up 8% in the pre-markets. Now it's up 2%. So people sold that pop on Domino's. Domino's up 2%. S&P looks like it's going to be bloody red today, down 0.7. Qs are down almost 2%. The Qs might go below 500, which, by the way, kind of is healthy in my opinion. Robin at 31.51, down 2%. I think the Qs going back into the 495 range. I think that is healthy. Put in the chat, do you think that's healthy or not? I think the Qs going into 490s are healthy. I think you want a December rally. You can't have a December rally when everything's literally at all-time highs. You kind of need a little bit of a pullback. And that pullback of Qs being in the 480s, 490s gives December a little bit of room to run as long as macro data is good in December. So I don't think people should be afraid of that. And I think the dip gets bought on those because at the end of the day, fund managers want to get into this market and they might want to get in at a cheaper price. Either it's a top right now or this is a healthy pullback. It's one or the other. I kind of lean into healthy pullback, but obviously the next few months is going to kind of give us a little bit of understanding of what's happening. One thing that shows this might not be a top is Amazon hit all-time highs yesterday. Yes, it's down 3% right now, but usually you're not hitting all-time highs consecutively day after day after day, which Amazon did for the past literally 5 days in a row as it broke out of that 200 in a bear market. It is possible, but doesn't happen all the time. Nike right there, 76. Bitcoin, 88,650. So Bitcoin falling a little bit from 90,000 in the morning. A lot of you guys are saying healthy pullback. I think that is fair. And so it makes sense. Would you buy XAI IPO? Okay, so good question. We have to talk about XAI and SpaceX. So SpaceX just got a valuation of $250 billion. It's going to be a tender offering raised in December. XAI just raised $5 billion. And now their new valuation is $45 billion. Their last offering was $24 billion. So almost up about 80% from that last offering, which, by the way, was in June. And it looks like XAI is not going to stop raising money. They're going to continue to raise this money going into the next year because GPUs are expensive, along with SpaceX right here at $250 billion. Would I invest in an XAI IPO? Maybe. I think it really depends on if I get access to Twitter, which is one of the things I care about the most in terms of that platform. I know financially the platform is not doing well, but long-term, I do believe in the potential of that platform. The other thing that's really important about XAI right here is that who does it help that they raised $5 billion? NVIDIA. I mean, I would say like 45% of that $5 billion is going into NVIDIA, right? It's going into Blackwell. It's going into better GPUs. A lot of it's also going into SMCI and Dell and all this CapEx stuff, but a lot of it's probably going to NVIDIA. So that's bullish for NVIDIA, and NVIDIA probably invested in that XAI funding round to be able to get that money back eventually when they buy their new GPUs. But definitely seems like that's bullish long-term for NVIDIA. Again, the bull case on XAI is it controls Grok. It'll be the brains behind Optimus, FSD, Twitter. There's all this stuff incorporated into it. And so it's kind of a conglomerate for all of Elon's ventures in the AI space. Palantir is 63.05, showing some really strong strength, up about 6.5% on a day, which is not bad at all in the context of Palantir. Amit, what are your thoughts on Honest? I like their earnings. Don't know too much about the company. Their earnings were good. They're probably down today because they were up 40% yesterday. But overall, look, I don't have any investment in them. I don't know if it's a great valuation right now at $655 million, but I thought the earnings were great. And so it makes sense that they're up 40%, but they're down because, when you go up 40% in a couple of days, people take some profits. Bitcoin trying to get back to 89. Tesla's the only Max 7 that's green. A lot of red today, folks. Enphase is green. Uber's a little green. Grab, that Singapore stock, is down 2.2%. Oh, some DD on Grab. So my uncle's in Singapore. I asked him about it. he told me something, and I believe this is accurate. People can check me if I'm wrong, but he said that Grab has an agreement with Uber that they can't get into more markets. Uber and Grab have divided markets on a non-compete because obviously they're massive competitors. And so they probably worked out a deal with Uber. So he says Grab can't go into China or India and scale because Southeast Asia is where they have their agreement with Uber to be in, which means it's a little bit of a saturated market and their growth potential is a little bit weaker because of that. So I don't know if that's necessarily a bear case, but that is one thing to think about when we look at Grab. SoFi is down 1.78%. SoFi is down. SoFi is indeed down right here. So SoFi down about 1.75%. Netflix, 827, they're down about 1.2%. Joby's down 3%. Spirit Airlines, I don't know why anyone would be buying this. They filed for bankruptcy, but they're going down 6%. Celsius also getting hit, down about 3%. Palantir and Tesla are the only ones that are green today. Really, and Tesla's up 1%. Palantir's up almost 7%. Look at that. Look at that. Palantir and Tesla, kind of the only names that are green right now. Amit, are you buying the hood dip? Not really. 30 is kind of my level for hood. I have some puts at 30, so if we get to 30, I'll buy that. But look, I like it at 31. I like it really for the long term. I was watching a really good podcast yesterday with Chris Camillo from Dumb Money, and they were talking about, here's a good stat on Bitcoin to get some people excited about Bitcoin. This is a stat I don't think a lot of people heard. This one stat I thought was incredible. 50% of Bitcoin is owned by Gen X, but 90% of the wallets are owned by Gen Z and millennials. So that stat right there tells you that a majority of the money inside of crypto is by people that have made money in their life, people that are older, so they have more income, they have more money, they have more assets, etc. But a lot of the belief in crypto is held by the youth. And so when we talk about wealth transfer and we talk about that money coming down, we talk about those assets being passed down to children, that money is going to come down to people in their 20s, 30s, and 40s, and they're going to have to decide where they put it. And right now, they believe in Bitcoin and crypto more than anything. So if that is not the most bullish argument I've heard of Bitcoin when it comes to generational wealth transfer in a while, then I don't know what is. Why is that bullish? Because Robinhood also benefits from a generational wealth transfer. And Robinhood, to me, is one of the easiest ways to play crypto. If you believe people will buy more crypto, you believe in their innovation, and you believe more money is going into that platform as more wealth is transferred, then I think at $31 over the long term, Robinhood is a good deal. Along with the fact that they're compounding at 36%, $5 billion in cash. So I think that makes them attractive even at these levels. Palantir, $62.99, just down a little bit from that 63 level. Rocket Lab down about 2% right here. Lunar's at $11. Lunar had a decent earnings. They're up 8% on the day. Palo Alto Networks is down. Vertiv is down. Let's look at the semis. I think the semis are getting hit right now. Yep, all the semis outside of SMCI are down, and SMCI is only up because it was sold off pretty aggressively right now. Pfizer 52-week low. Okay, so why is Pfizer in a 52-week low? Well, Donald Trump appointed Mr. Robert F. Kennedy Jr. as the Secretary of the Health and Human Services. All pharmaceutical stocks are getting hit today because RFK is not a fan of big pharma. So Pfizer's down. Moderna's probably down. Moderna's down 6%. What's another one? J&J. Johnson & Johnson, they're probably down. J&J is slightly up. Okay, they're slightly up right now. They do other stuff besides just pharmaceuticals, but it's not necessarily a pure play. What's another one? Pfizer, Moderna. What are some other pharmaceuticals? I had a list yesterday of a bunch of pharmaceuticals that were red. Let me just read off this list right here. So you got Pfizer down. You got Moderna down. Here's some of the other names that are down. Eli Lilly. Yes, I had a list. Sorry, I don't have that exact chart with me. Let's see if Eli Lilly's getting hit. Yeah, Eli Lilly's down 3%. I mean, these are that's bad. Moderna's down 6%. Pfizer's down 5%. Eli Lilly's down 3%. NVO, thank you for that. Yeah, NVO. Look at that. That's down another 3.6%. BMY. Bristol Myers Squibb, that's down 2%. All the pharmaceuticals, ABBV, correct. AbbVie, down 2%. All the farmers are literally getting hit, not off RFK instituting any policies, but off Trump saying, hey, RFK is going to be part of this administration. He's going to run this. And now let's say Moderna wants to get a vaccine push. We already know RFK is not the biggest fan of, vaccines. He's not necessarily getting rid of vaccines, so he said. But, if they try to institute a new vaccine, they're going to have to go through RFK. And RFK is not going to easily allow those things to get approved. So you're seeing pharmaceuticals get hit. As A. Lenovo says right here in the chat, pharmaceuticals is the wrong business for the next 4 years. I agree. We were talking about Pfizer yesterday. It pays a juicy dividend now at more than decade lows. One would argue it's deep value, but is it deep value if their drug pipeline has to go through the bottleneck that is Robert F. Kennedy Jr.? That's an argument. That's a real argument that I think a lot of people have to think about. Again, all the pharmaceuticals except J&J, because it's not a pure play pharma. They have a lot of other parts of businesses, like they make, different, they make a lot of medical devices, etc. That is what's keeping them up today, but everything else is getting hit right now. Bitcoin, 89,000. Robinhood healthily holding above $30. I agree with I'm Beneficial right here in the chat. Robinhood, you would argue, would be down even more as we see some Bitcoin weakness and some S&P weakness, but Robinhood holding above 30, which is not bad. Rocket Lab now down 2.7%. Palantir holding 63, which is very nice. Look at Tesla. Tesla's getting green, up 2.16%. Big tech maybe rotating into Tesla. Amazon is getting hit right here, down 3% on the day. Not sure why Amazon's down, other than people taking profits. Not necessarily sure why that's down, but some of that money probably is going to Tesla, as Tesla's up 3% right now. XRP, oh, this was so funny. I texted Steve this morning. I said, hey, why didn't you tell me to buy XRP? It's up 50% right now. He probably woke up to that message and he wanted to kill me. He was like, oh, you've got jokes, huh? But yeah, XRP is getting some love as well, as a lot of the cryptos get momentum. Where's Dogecoin? Are we still at 40 cents? Dogecoin is at 36 cents. All right. So we got a nice little decline from 42 to 36. Solana is, I think, at 205 right now. Solana, I'll check Solana in a second. And ETH is at 3,000. ETH was at 3,200. ETH now down at 3,000 right now. The whole Nasdaq is down, correct. The whole Nasdaq is down. The entire market's taking a bit of a hit. Russell's green, interesting. Russell's green. Russell just turned red. The problem with small caps right now is if inflation is still high, which is what Jay Powell kind of signaled yesterday, and why Fed rate probabilities went lower today to 45% for December. Small caps can't survive without rate cuts. And so, although they got a nice bump after Trump, that bump has faded a decent amount. I mean, it was at 240. Now it's at 230. So you're seeing the Trump pump start to fade a little bit, which is normal. That's healthy. We still have a couple months left throughout the rest of the year to have a Santa Claus rally. You can't really have a Santa Claus rally when everything's at all-time highs. You need things to have a little bit of a pullback and consolidate. So I think this is normal, but we need that rate cut for the Russell to do well. You know what doesn't need a pullback, or what is refusing to give a pullback, is Mr. Palantir. Palantir, $63.26, up 7% currently on the day. Not bad. PayPal's green as well. Yep, PayPal's green. PayPal up about 0.21%, 85.97. Where's SoFi? SoFi, 13.25, down 1.16%. If SoFi falls back into the 12s, one could argue the uptrend is a little cracked for the moment. Maybe that's consolidation, but holding 13, I think, would be very, very important for SoFi. Robin at 31.71, Palantir right here, 63.30. Palantir has to break 63.39 to break above an all-time high, so we got 9 cents away. Maybe we can get there. TJ will be on at 10 a.m., correct? TJ will be on at 10 a.m. And that would ultimately be bullish for Palantir. Okay, cool. A couple other headlines I want to take you guys through, and some other stuff that we're seeing. Also, Michael Saylor yesterday, did we break it? We're 1 cent away. We got to break it right here. We got to break it. Let's see if we can break it. Yep, there you go. All right, broken all-time high for Palantir. Broken all-time high for Palantir. Now we just got to keep going higher. TJ just texted me. He said he's going to be here around 9, which is that 10 time? Is that 10 my time? Yeah. Okay, that's actually when we expected him. I'll just say, yeah, you can come on 9:15. So that's bullish for Palantir. That's really good. So that's not bad. But now we got to see if we can get through 64. So we broke through 63.40, got to 63.48. So we broke the all-time high officially. Now 64 is on next. 10 minutes. Yeah, TJ just texted you. Just texted you. Yeah, you're good. You're good. If you need another 25 minutes, that's fine as well. You can come on at like 9:15 if that works. All right, so 63.23 on Palantir, Bitcoin 86,000, Robin at 31.76, Amazon now recovering a little bit, getting a little bit of a green candle right there on some of the cues. Palantir taking a little dip right there at 63.07, some resistance at 63.50. Rocket Lab down about 1%. Tesla up at 3.17. Okay, so some headlines, some other stuff that we got to talk about last night in terms of things that have happened. We talked about XAI raising money. We talked about SpaceX raising money. We talked to Bill Ackman. We talked about Warren Buffett. David Tepper added 40% net long China positions. So when Tepper said to buy everything, he didn't literally buy everything because he sold some of his BABA, but he did buy a ton of China. Stephen Cohen's hedge fund purchased 730,000 shares of NEO in Q3. So China pump was perceived as bullish at the end of September by a lot of these hedge fund guys. Maybe they sold out of it, but a lot of them definitely did buy as well. Gary Gensler put out a note to the SEC yesterday. He said, and I quote, "I've been proud to serve with my colleagues at the SEC who day in and day out work to protect American families on the highways of finance." One could argue that Gary Gensler is getting ready to retire, which would be very, very bullish for crypto. Don't know if that's going to happen, but it definitely sounds when he says, "I've been honored to work at the SEC." It looks like he's preparing for a exit speech, which ultimately is good at the end of the day to have someone who's pro crypto. Citi upgraded Amazon to $252. Jefferies raised their price target from NVIDIA from 150 to 185. And take a look at this. Bitcoin, if it ends out the month the way it's looking, it will close on a monthly candle of $19,448. That is the highest monthly candle ever on Bitcoin. And we're not fully done with November yet. So if Bitcoin even just holds this level, we're going to be closing at the highest monthly close on Bitcoin ever in terms of candles. And one could argue that is probably pretty bullish for Bitcoin. Today is the third Friday. Original options expire, so my calls are printing that expire today. Yeah, I forgot. Today's going to be one of those days where options are going to definitely have some interesting dynamics as those are expiring. Bitcoin, 89,000. Palantir, Robin at 3162. Palantir, 6285. If you're just joining, Palantir has informed investors they are switching to the Nasdaq index in terms of their listing from the New York Stock Exchange. That gets them the eligibility to get included in the QQQ ETF. That's why the stock is up 6% right now. Also, Stanley Druckenmiller sold 95% of his Palantir position. So he's out of Palantir, but other funds are buying into Palantir, and the market is expecting that Palantir can benefit if they get included into the QQQ index. Q's right here down about 1.29%. Oklo down 15%. ASTS down 16%. Again, very volatile stocks. We're up a lot year to date. Earnings market didn't really perceive them as the best, apparently, and that's why they are currently down. MicroStrategy is up 2.6%. Disney's up 3%. Coinbase is up 2%. Enphase as well, catching a little bit of a bottom. Enphase right here up 2.45%. And PayPal at 85.91. PayPal is also a little green right now. Okay, there you go. Not too bad. Billy says, I dropped 33,000 in China yesterday. Well, the big guys also did the same with you. They continue to buy China as it gets some more momentum. Druckenmiller bought low and is not selling. What is he buying into next? No, Druckenmiller did sell Palantir. Chris, you might have missed it. Druckenmiller sold 95% of Palantir, of his Palantir position. What he added, actually, if you take a look at this, I'll show you guys right here. He added some Mercado Libre, which is, I guess he's betting on some emerging markets for some momentum. So he added Joby as well. I know a lot of you guys like Joby. He added Joby. So for those that like the eVTOL space, he added Joby. He added some RGT. That's the Argentina ETF. Which is up 50% this year. He added Mercado Libre, Latin America. He had 11,000 shares to that. Oh, sorry, he didn't add Joby. That was a no change, but he didn't sell any of his Joby. So he didn't add, but he didn't sell. So here's the ones he added. Mercado Libre, WWD, some other names, Citibank, Finance, Starbucks. He had 52,000 shares of Starbucks, USB, KeyBank, TSM. He added 57,000 shares of TSM. He added, 233,000 shares of my favorite bank, TFC. He added regionals as well. He added 2 million shares into regionals. Look at that. Not bad. He's going long financials here, which makes sense under Trump. I think I'm going to start a DCA into regionals or TFC next year as well, because I spent at least 5-6 months doing due diligence on TFC. I feel like I understand that company very well. Obviously, it's much more expensive than before, but as a dividend paying stock, I've actually listened to their earnings calls. I like management. So that might be a candidate for a DCA next year, just in terms of a boring position to have that pays a dividend. Broadcom, he added 239,000 shares. And ARM, he added 21,000 shares. Look at what he sold. He sold Microsoft, 357,000 shares. He sold Adobe, 2,000 shares. He sold Palo Alto Networks, 45,000 shares. Sold Palantir, 728,000 shares. He sold all of his Apple. He sold all of his NVIDIA. And he sold all of some of the other tech names that he has, but Apple and NVIDIA are kind of the main ones that he ended up selling out of. So that's what you got for Drux. That's what you got for Stanley Druckenmiller. I'm beneficial, says my girl works at TFC. Okay, there you go. Yo, you got to own some TFC then. If your girl works there, you gotta, I mean, if your girl works there, she probably knows something about it, right? Not saying she knows everything, but it's a decent company, dude. From the DD that I've done, they're the 7th largest bank in the United States, even though they're the largest regional. And their deposit base is very sticky because a lot of it are laundromats, liquor stores, right, in the south of the United States. Like, these are people that are not going to SoFi, right? A laundromat is not going to SoFi, especially because SoFi's business banking infrastructure kind of sucks. But also, these guys get paid in cash. They have to go to a physical branch to deposit the cash. And that sticky deposit base is what kept them alive when Silicon Valley Bank crashed, because 50% of their deposits were small businesses that were not going to go to SoFi or some other random bank. So I think it's a really good candidate next year, and we just got to see how the financials and growth continues to look at. Also, they sold off a ton of their student loan portfolio, which was great to increase their CET1 ratios. NVIDIA right here down 2%, Robinhood down 2%, Amazon down 3%, Domino's up 2%, Hims getting a little bit of the dip bought up, down 3.5%, but it was down 6%, and Palantir still holding a $63 price, currently up 6.5% right now. Doug said this laundromat wanted to go to SoFi, but he didn't. Shout out to Dougie. Also doing the American dream, taking money out of the stock market and putting it into some safe stuff like a laundromat. Maybe eventually SoFi's business banking stuff is easier for people to set up. But again, SoFi's not really going after small businesses right now, which is not that big of a concern for them. That's so cool. He bought RGT and I'm already in it. Yeah, Argentina. This is one that I feel like I should, now after I came back from India, I feel like emerging markets are now on my mind a lot more. But I mean, take a look at RGT. Let me just show this right here. It's up 54%. And the reason I feel like I should have understood this a little bit more is because of Milei. By the way, Milei met with Trump yesterday and they took a picture with Elon Musk. But Milei is liberalizing the country. And they still have over 250% inflation, which is not good, but they're growing. They're just economic entrepreneurship is happening at an unprecedented level in that country. And so when you've got that much growth, when you've got that much opportunity for a country that really has never seen growth because it's been plagued by socialist policies, then you're gonna get the markets ready to bet on that. And Stanley Druckenmiller took a big bet. I think the story behind Drux is like he searched up Argentinian companies on Perplexity, he's also a big investor in Perplexity, in January. And I think he saw that like they were doing well. And then he just told his firm to like invest a couple billion in it. And then they started doing a lot more research. But by the time they started doing research, it started really improving. So he kind of invested on a whim and it ended up working out as Milei has continued to liberalize. So there you go. Free markets are benefiting Argentina. NVIDIA down 2%, Amazon down 3%, Robinhood down 2.1% currently on the day. Okay, so let's take a look at what Saylor said yesterday for those that didn't get a chance to see what he said. Saylor is pretty damn bullish on Bitcoin. He thinks the party is not stopping. In fact, he has a price target for Bitcoin at $100,000 by New Year's Eve. If that happens, that would be amazing. But he does think New Year's Eve, there is a shot for that $100,000 Bitcoin. Now, will that happen? I don't know. But if it does happen, I think a lot of people will be excited about that. So let me just pull that up right here. And let's take a listen to what he said. And we know he's going to sell more. I mean, we know he's going to buy more, so that's not changing. Oh, before that, hold on. I think we have a Fed president. We do. We have Goolsbie. Okay, so I think we should listen to Goolsbie. This is a Fed president. This is someone that can give us an indication about where inflation is going. He's live right now. Let's listen to Goolsbie. And let's see a little bit about what he has to say as well.
The new data interest rates, much more Chicago Fed President Austin Goolsbie. So your ears were burning probably there, Mr. President. You heard.
Yeah, that was Rick. I haven't seen him in a while. I got to have him over to the Chicago Fed.
He's local.
Exactly.
He's local.
I should go to, what is that? Scoozy? What's the name of that? Is that restaurant still? I understand it because the last jobs number was kind of weak. So I didn't know what he was looking at. And I'm wondering whether the Trump trade is now informing some of the Fed's decisions. Are you preparing for tariff inflation?
Well, you got a lot going on in there.
I know.
I will say,
I think a lot.
I always clarify the rules say I'm only allowed to talk for myself. So if you're asking me what the chairman thought, you gotta reach out and ask the chair. That said, as I look at the economy, the basic story of what's been happening, if you're looking for the long arc, is inflation has come way down from its peaks. The job market cooled to something like about full employment where we want it. We did get 1 month of weak jobs numbers that it's hard to reconcile what does it mean for the long run, because we had a bunch of hurricanes. We had a big strike from Boeing. Previous to that,
Right.
we had a couple of very strong numbers. And previous to that, we had one weak number. So again, we got to take the through line. And I think the through line, as long as we keep making progress toward the 2% inflation goal, over the next 12 to 18 months, rates will be a lot lower than where they are now. That's where the neutral, that's where we need to settle. I took from the chair's comments that we're not, I like this phrase, that we're not in a hurry to automatically get there. And I do think if there's disagreement of what's the neutral rate, it does make sense at some point to start slowing how rapidly you're getting there, just to figure out, given the lags of monetary policy, are we at neutral? Are we getting close to neutral? But the overall through line is, I was saying before the election, and I'm going to say now after the election, it has nothing to do with the election. It has to do with what the conditions are. And to me, the conditions on the dual mandate side are looking pretty balanced. And so we should be thinking over the next year and a half, the rates need to come down.
What do you think, core? If core's 2.8, that's a ways still, and unless you really
that's too high. Yeah, no,
unless you really don't mean to. And there's no reason. Why do you think there's?
What do you mean we really don't mean to? We mean to.
Either you move the goal. I'd move the goalpost. It'd be a lot easier for you guys.
No.
But
So moving the goalpost is what a lot of people want them to do. But if the Fed did that, they would lose a lot of credibility and legitimacy. What he's saying right there is that he still thinks rate cuts make sense because of the labor market. But the question is that enough, given inflation could be reaccelerating, to still end up lowering rates?
But
we're not moving the goalposts.
Then you're not there.
No,
you're not there.
No.
And everything looks like the stage is set for inflation. Maybe it doesn't go back up, but do you really see a reason why it would come down with all the proposals that, and I know you said it doesn't matter with the election, but the stock market and Bitcoin and, government spending is going to happen. We're going to extend the tax cuts. Probably. We're going to no taxes on tips. And you probably work, I don't know whether that benefits you with overtime. I'm sure you're there all the time, but your overtime is not going to be taxed.
Well, I like that vote of confidence, Joe. Look, here, as the chair said in the press conference, when it comes to policy, our job at the Fed is not to speculate about that or weigh in on what the judgments are. Conditions change all the time. If the conditions start to change, we will take that into account, but we will get inflation back to 2%. Now, let's be a little careful. Backward looking 12-month averages, they're useful. We should look at them, but what matters are the new months coming in. If we're getting new months that are as hot as 2.8, 3%, and we get that on an extended basis, that's too high. The Fed, we've stated it's a sacred covenant. 2%, we will get inflation at 2%. You can't look for a new job until you finish doing your job. So we will have to get inflation to 2%.
So they're not moving the goalpost there, which is good for their credibility. But at the end of the day, a lot of people are wondering, all right, can you actually get there? And how much pain are we going to have to go through to be able to get there?
What exactly is happening? If you see the import price number that Rick was talking about going up, we've seen blips. We saw in the beginning of this year a blip up in import prices that was just a bump in the road. And we went back to the new months of inflation coming in right around the 2% target. And that's where it has to be. Otherwise, the Fed has to act.
What do you make of the 10-year? It's done nothing but go up since. Can you give me like 20% because of this, 20% because of that? Part of it's from Trump, part of it's from.
I think some component, we have to figure that out, and we have to monitor those long rates. The Fed is in the business of setting the Fed funds rate, and how that translates into the wider market it translates both with a lag and with something about expectations. It's clear that in the realm of possibilities could be if they thought growth is going to be higher, that would affect what the long rates are. If they thought that the Fed's short rate decisions the rates would go down at a slower rate than they thought before, that would make the long rates higher. If you take a step back and compare to, say, the spring, they're up in the near term, but they're not up by that much from where they were several months ago. So we for sure should watch this, and the arguments in Washington affect those long rates, but our job is to figure out the longer through line. And as long as we stay on a path to getting inflation down to goal, and the job market is not falling apart, that's the through line that we want. And so far, the through line is basically still that.
All right. So that's what Goolsby's talking about. Again, trying to maintain the argument that the Fed is going to be neutral here and really get rates down. For 10-year, 4.481. I think that's the highest we've seen in this whole week. It was 4.47 yesterday. So you got the 10-year spiking right now. The probabilities on a Fed cut in December, let's take a look at that. 58.41. It was 55.45 this morning. So it's going up a little bit right here. Market's still a little afraid. Market is still a little afraid when it comes to if we're going to get these rate cuts. Let's put it in the chat. Do you think we're getting a rate cut? I guess I'll do a poll on this. Do you really think we are getting a rate cut? Let's do a poll. Let's see the sentiment right here. I know a lot of you have been on the train that we're not getting a rate cut at all in December. Let's see. Rate cut in December. Yes or no? Let's see. Again, we still have CPI and PPI data over in November to take a look at before the Fed makes that decision. But as of now, markets are still 50-50. PayPal's now red. SoFi slightly red. Where is Palantir? I think Palantir is still holding up pretty damn well. Yeah, 6.2% on the day for Palantir. Look at that. Bloody red day. And when I mean bloody, I mean it is bloody. The Qs are down 1.6. Look at that. The Qs are 30 cents away from going below 500. S&P is down 1%. S&P 587. So where was the S&P before Trump got elected? S&P on November 5th, November 4th was 576. Before Trump called 570. So it's still up above from when Trump got elected. It was at 570. Now it's at 587. But it hit 6,000 and we are below 6,000 right now. 60% say yes. 40% say no on the potential of a rate cut in December. So these are the days, by the way, to sell puts. Like the days to sell puts are the days where markets are red and you want stocks at attractive prices. That doesn't mean your put prices might be the best strikes because things could obviously keep going down. But these are the days to sell puts. Pharma still is incredible, dude. Eli Lilly, Novo Nordisk, Bristol Myers, ABBV, Moderna, Pfizer, all of them getting hit 3 to 7%. This is exclusively because of RFK. It's not like some pandemics out there right now or some news came out. Or if there was a pandemic, they'd probably be going up right now. Like they're all down because now people are worried that RFK is not going to allow them to easily get drugs fast-tracked through the United States. Which, I mean, it's a reasonable argument for why these would be down. The Qs just hit below 500, 499. I like this, dude. I like this dip. I really like it. I don't think it has to be a dip that has to be bought, but I do think we need it to cool off. We need it to chill out. Things were getting really high. And I know a lot of people were getting just worried about how the market was acting just because the Trump pump was one of the biggest election pumps we've seen ever. And so it makes sense for it to fade off a little bit and kind of retool and for valuations to come down just a smidge to make sure that when NVIDIA reports that they can crush it, you can get a natural kind of Santa Claus rally if that plays out. So I don't think that's horrible. Dutch Cut says, bro, I'm a massive Palantir bull, but this is just ridiculous. You know, I don't think your sentiment, Dutch Cuts, is not shared by many people in the Palantir community. I talk to a lot of Palantir investors every day, just through DMs, texts. I call a bunch of people. I mean, everyone I've spoken to Palantir alumni, they're looking at the price and they're like, I was speaking to an alumni at AIPCon and, he doesn't work there anymore, but he still has a ton of shares. And I think the stock was at 35 and he was just like, I have no fucking clue how it's even at 35. Right. Like he was like, what is going on? Right now, his perspective is he thought the company would never go public. And so it's a big deal that the stock's even public and the S&P 500, all that stuff. But still, even at 35 was an $85 billion market cap, guys. that was perceived as like kind of ridiculous. It is at 143 billion right now, and not much has changed other than accelerating growth to 30%. But that is not massive Nvidia type of growth. So it is taking a life of its own right now. Price to sales of 54 is a little expensive, and the fun part of this story is that if you've been in here for a while, you can kind of just chill out. Look, here's the thing: if you've been in Palantir for a while, either you take your profits, or you say, I have a generational company. I don't give a shit if it goes back down to 20 or 30. I'm holding forever. The only losing scenario here is if Palantir goes back to 20 or 30, right? Let's say the 50, 60% decline, and it never gets back to these levels, or it takes like 10 years to get back to these levels. That is the nightmare scenario. The nightmare scenario is it pumped up. The pump was completely fake because it goes down another 60%. And then that pump never happens, or it takes very long for that to happen. I personally don't see that happening. Not with the momentum with Palantir, not with the hype around it. And when I mean hype, I mean that in a positive way in terms of people just wanting to get access to one of the best software players in AI, not with S&P 500, Nasdaq, not with Karp releasing a freaking book in February and people getting to read his thoughts. I mean, there's just so much momentum, not with them being perceived as the only AI software play in the market. I just think it's hard, even if you have a dip, for it to never come back to these levels. And if you do have a dip and it comes back to these levels, congrats, you got to get cheaper shares. Right? Like, think about all the Tesla people that survived from 400 to 103, I think, at its lowest. Let's get the exact price. Tesla at its lowest in January 2023, 112, roundabout, 112. Or 101.81. That was the lowest. 101. You got to buy Tesla at 101.81, and now it's back to 316. Took a couple years, but now it's back, So, again, don't get me wrong. I'm not saying Palantir is not expensive. I get it. Palantir is expensive. I'm just saying, as a long, these are those stocks sometimes where you just let it ride out and you really don't have to do much other than wait. And 10 years from now, you think Palantir is more important or not. That is the overdetermining factor of if you continue to hold. Along with Charles saying right there, Palantir AIP is also just getting started, which I think is very fair. Neil says, I found Palantir just at the DPO, been sitting on 22,000 shares at $8. I just became a millionaire with the rally. Wow, that is incredible. Congrats to you, Neil. So 22,000 times 8. So you put in 176, 22,000 times, let's call it 63, 1.3 million. That is incredible. Congrats on that, dude. Absolutely congratulations. And people like you, Neil, I imagine, are saying, hey, I'm holding on for the ride, And if you do dump on anyone, whoever's buying it, most likely institutionals, are buying your shares at almost 8x the price you paid for them, which is the benefit of being early. And so I think a lot of people that think Palantir is just getting started, maybe they're not the next NVIDIA, but if they can one day become, $500 billion, $1 trillion company, if you had NVIDIA at 15, why would you sell at 150 if you still think that story's not ending? If you have Palantir at 8, why would you sell at 62 if you think that story's not ending, right? That is the kind of logic and thought process around Palantir. Okay, cool. So that's what we got on Palantir right now. Let's go to Michael Saylor. I said we were looking at Michael Saylor, then we'll have TJ on a little bit. Here's what Michael Saylor said yesterday about Bitcoin and where he sees Bitcoin going. Is VIX up right now as well? Let's look at the VIX. The VIX is up 5%. So we do have some volatility today.
In an exclusive interview is Michael Saylor, co-founder and executive chairman at MicroStrategy. He is joining us from the Cantor Crypto, Digital Assets, and AI Infrastructure Conference in Miami. Michael, it's great to have you on the show.
Yeah, thanks for hosting me, Morgan.
So I'm going to start right there. The torrid run we've seen in Bitcoin, is this all just anticipation about what a Trump administration is going to mean for it?
The red wave is probably the biggest thing that's happened in the past 4 years for Bitcoin. It's incredibly auspicious for Bitcoin and for the entire crypto industry. But we're also getting a lot of very constructive support from Wall Street. BlackRock has been a very, very strong voice articulating the Bitcoin value proposition. And of course, MicroStrategy on October 30th announced that we were going to raise $42 billion to buy Bitcoin. And that's the same as saying we're going to buy every Bitcoin mine for the next 3 years at $85,000 or more Bitcoin. So there's a lot of bullish things going on in the market right now.
And I do want to get to that audacious $42 billion fundraising plan of yours. But first, there's a lot of regulation and regulatory aspects that are in focus with the Trump administration coming into play. SEC chairman, for example, a lot of expectations that Gary Gensler is going to step aside. And I realize Bitcoin itself is governed as a commodity, unlike other cryptocurrencies. But when you're talking about the ETFs and when you're talking about the cryptocurrency exchanges and when you're talking about companies like yours, MicroStrategy, which is publicly traded, it is SEC. So how important is that appointment going to be? And who would you like to see at the helm?
Well, I think whoever chairs the SEC has probably the most pivotal role in the entire digital assets industry. I think this is incredibly bullish for digital assets. It's very good for the crypto industry. We're going to see a lot more pro-Bitcoin policies. We're going to see a digital assets framework. We're going to see an end to the war on crypto. We're going to see a lot of pro-Bitcoin, pro-business policies. And I think that clearly the SEC will be a big part of it. So it's above my pay grade to have an opinion on who it's going to be. But I think it's pretty clear the House, the Senate, the White House, they're all very pro-crypto. So I expect that we'll have a very supportive head of the SEC.
Michael, well as you've done buying Bitcoin, I'm not sure anything is really above your pay grade at this point, which leads you to the question, what do you think is the biggest threat to Bitcoin's price staying above 60K? What potentially causes another dive below 30K?
Yeah, I don't think it's going to 60K. It's not going to 30K. I think it's going to go up from here. I'm planning the 100K party. And I'm thinking it's probably going to be New Year's Eve at my house. So I would be surprised if we don't go through 100K in November or December.
So then what's the biggest threat to it going lower, even if it doesn't get that low?
I think the biggest uncertainty in the industry was November 5th. And would you have a blue wave? Would you have a red wave? Or would you have a split Congress? And would you have any dispute about the future of crypto assets and Bitcoin? I think that was settled by the people very decidedly on November 5th. And I don't really see any threats in the near-term horizon.
A strategic Bitcoin reserve, how likely is it that that is actually established? And why would that be a good thing when you're talking about a decentralized asset now being stockpiled by a centralized government?
Well, that's being sponsored by Senator Lummis from Wyoming, and she understands the value of the frontier. The United States was built by purchasing Manhattan. Then we purchased the Louisiana Territory. Then we purchased California and acquired Texas. And then we bought Alaska. The next great frontier is cyberspace. And the obvious thing to do is to own cyberspace, buy the future. And so I think it's a great idea. I think it will happen. And I think it's important to the United States because it cements the United States' control over the future world reserve capital network. Senator Lummis's bill will offset $16 trillion of our debt, according to my models right now. So I think it's economically wise, it's technically wise. And again, Bitcoin is manifest destiny for the United States.
So you got Saylor saying that Bitcoin is going to happen. Here's the thing that I think we all have to remember. Hims, by the way, getting hit right now. If the United States does announce a strategic reserve around Bitcoin, let's just play the hypothetical scenario out. Hims down 5%. If we buy 1 million Bitcoin, which one day if Bitcoin gets to millions of dollars a coin, right? Again, let's just play it out. I read an article yesterday saying that we could solve about 16 trillion of our debt by holding 1 million Bitcoin. Again, I know these are crazy numbers, but is that crazy to take the risk? I mean, right now, I don't think Trump or Harris had a plan on how to solve the debt. But Saylor has a plan. Now, you might not love his plan or agree with his plan, but it's a plan that actually one day could happen. Whereas the other guys are just saying, hopefully we'll just eventually reduce the debt a little bit. It's like, no, you're not. You're not going to reduce the debt. I mean, I know Elon's going to try with the government efficiency and hopefully that'll make things better, but you're not going to reduce $36 trillion of debt. But if Bitcoin, gets up to like millions of dollars a coin and the United States owns a couple million of them, maybe there's a way to at least cut it in half. So the key thing here is if the United States announces that, and then you have other countries that follow, because a lot of them follow the United States, that is bullish, dude. Crypto regulation is going to come down dramatically in the next 4 years. Gensler's out. You're going to have pro-crypto people. Trump himself has a freaking altcoin. Trump has an altcoin. Like, there's no way this administration is going to be bearish on crypto. It's just not happening. And so then if the United States buys Bitcoin, I think that's what really takes us to the next level. But the question is going to be, how does that happen? And now, do you have to buy Bitcoin to play it that way? I don't think so. You can buy the ETFs. You can buy Robinhood. You can buy Coinbase. You can sell cash secured puts on Coinbase and Robinhood to collect premiums from the market. And if you own them in your head, you can be like, oh, I don't own, some random company. I own Bitcoin, because if Bitcoin goes up, Robinhood and Coinbase are going up as well, because people use those exchanges to buy Bitcoin. You can have MicroStrategy, which I know trades at an alpha, but there's so many ways to play it. The Bitcoin miners, even though they're not my favorite, there's opportunities there. I think there is a way to get exposure in a way that doesn't necessarily just need the volatility of Bitcoin, the asset itself, but still can benefit off the United States potentially going super long Bitcoin. And I think that's important to kind of think about when we're thinking of the long-term trajectory of Bitcoin itself. Okay, here we go. TJ, it's time for him to join the show. We're going to be doing our option segment. So for those that are new to the channel, thank you all for being here today. Every Friday, I have my good friend TJ the Wheel Deal join the show, and we discuss everything in the world of options and wheeling, how to generate income through selling puts and calls. He made a big move in his portfolio over the week, and we're going to talk about it and go through the logic and discuss all of that in terms of what it means for the future of his portfolio. TJ, welcome to the show.
What's up?
I see you're wearing a Palantir hat, but I don't think you have any more Palantir shares.
No, I definitely do. You see, it's just, you got to pay attention, man. The devil's in the details. Everybody thinks I sold Palantir. What I did is I restructured Palantir.
All right, we're going to talk about it. We're going to talk about it because it'll be good.
First, let's share the screen real quick. I sold Bitcoin at $75,570.85. I kind of think it's going to the moon. Why did I sell it? Because it doesn't work for my hamburger stand. I can't sell cover calls against it. And then the whole no keys, no crypto bullshit. So you technically don't really own these Bitcoin on Robinhood. So I was like, if I'm going to do the thing and have the wallet and all the other shit that I don't understand anyway, I'm like, what am I doing? I'm going to stay in my lane. I use that money, go sell put somewhere else, sell calls, do the Bitcoin proxies, the shit that works for me. I hope Bitcoin goes to the moon, because I'll at least, get somewhere over there by the stars with my miners and stuff like that. And then I don't want to do MicroStrategy, because I'm like, well, how does that work? They dilute you to buy Bitcoin, but they're never going to sell Bitcoin. Well, how the fuck does the company ever make money? I don't understand those things. And every time I listen to Michael Saylor speak, I'm like, oh, I'm going to go buy Bitcoin because he gets me all fucking pumped up.
So, it's interesting, because obviously if you held Bitcoin, you would make some more money, but for you, it doesn't work in your personal portfolio, and there's other ways to play Bitcoin without having to buy it. So I think that's fair.
Yeah. So I'm the guy that sold 1.73 Bitcoin at 131K. This is the way I sleep. like whatever it is, goes to $1 million, fantastic. I'll go make my $1 million somewhere else. Like, it's all good. You don't have to be part of everything. But
that is fair. That is very fair.
Anyway, so let's get into it, man. The portfolio's been bleeding out a little bit. This Trump pump is, now for the last week, it's kind of flat.
So let me get your raw thoughts on it. Do you think that's actually okay that we're seeing this pullback right here? It's normal for the Trump pump to fade off a bit?
Yeah, it's healthy. I mean, it's healthy. I don't know. I mean, it's just like, let's talk about Tesla, right? Like, Tesla went all crazy. What didn't really change with Tesla, except that Trump became the president-elect. But then they talked about the 7,500 credit potentially going away.
Right. And
that was no bueno for the stocks, put some downward pressure on it. I just think that stocks just typically, it's not healthy for them to just go up, 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 up. They got to consolidate a little bit. And we'll talk about Palantir here in a little bit, because Palantir has kind of defied gravity right the last year. They're like, fuck you and your 9.8 meters per second squared. We don't care. You know what I'm saying? Like, it's going up and to the right. And it's exciting. I'm still part of it. I'm happy to be part of Palantir. I just had to restructure my exposure to it because I was capped out.
Right.
I was not making any more money, and I had way too much money tied up there. So I just had to restructure everything. Okay. So anyway, but the Trump pump is not there anymore. The last week's been flat, a little down, but it's been pretty good month. Been a real good 3 months, and the year to date still, okay. There's a lot of people making a lot more money, as far as like percentage wise. And on my son's smaller account, I'm at like 70-80% too. It's just, again, not to make like excuses or anything, but whenever you get with bigger money, it's hard to get those types of returns because you're not willing to do all the stupid shit that you do on a smaller account because you're looking at like preservation of capital as like a real thing and stuff.
Yeah.
At least I am, because I've never dealt with this level of money. So this is new to me too.
Yeah. So I think let's get started. I mean, we got a lot of different positions to talk about, but I think it's going to take us a good 20, 30 minutes to get through Palantir. So let's get started with that one. I'll give you the floor and you can discuss kind of what your strategy and was here.
Yeah. So it's not that complicated for me anymore. It was when I was doing it, but now I'm just like, I'm totally at peace with it. So essentially we had 24,000 shares and now you see only 4,000. You see that?
Yep.
So the position is definitely a lot smaller. So why is that? It's because I was doing it live and I hadn't even looked at the portfolio. Palantir was pumping in the $60, $61 range. And it said that the shares were up like $88,000, but then my covered calls were down like $86,000. I was like, any money that I'm getting on capital appreciation is being negated by the money that I'm losing on the covered calls because I'm just going deeper and deeper in the hole, right? We're going deeper and deeper in the money on these covered calls.
And again, for people that don't know, you had pretty much all your shares up for sale at 35 and 45. So every dollar above that, you were not making profit on the shares.
Correct. Because it came down to the deltas, right? So whenever you own shares, what is your delta?
It's the probability that you get assigned on the.
No. When you own shares, what is your delta on the shares? 100, right?
Yeah, 100. Yeah.
100. However you want to look at it, right? It's dollar for dollar. Well, whenever you have covered calls or cash secured puts, those also have a delta. So then you have what's called a position delta. So the shares are a 1, and then my covered calls are going to have a delta attached to it. So in this case here, the delta on these $45 covered calls is 81. So for every dollar that goes up, this covered call is either making me 81 or losing me 81, but the net position delta is about 19. So the net position is making us $19 if Palantir goes up a buck, or losing that much if it goes down a buck. You follow me so far?
Right.
So because the covered calls were sitting at like 98 and 99, there was no more money to be had, even if Palantir went to 100. So I had to take a step back. I had to get out of my emotions. There's no money over there.
You were on the phone with me and Steve this week, and we were talking about this.
I was, and I was like, dude, I got to play a game of math with our beloved Palantir. I'm a big Palantir too, dude. I was in this thing since the DPO. So I was like, what can I do to maximize my exposure, but also minimize my downside, because I am in a position to lock in a really huge win here as well. And it's like the bird in the hand type thing, right? There's still a couple birds over there in the bush. I think this thing's going to go up and to the right, but I also don't think it's out of the realm of possibility and plausibility that this thing could go to 40 or 45 bucks, and it would actually probably be very healthy for the stock long term. Right. There's probably a lot of gaps that need to go get filled if you look at all the technical shit, right? Have the other guy on here for that. He's real good at it. So I was just like, okay, well, how would I play it? How would I play it if I was getting started day one? Shout out to Invest with Henry for stealing all my shit. I go live, I do all of this stuff. This dude goes, makes videos on it and acts like it's his idea. Go look at the videos. I'm not lying, dude. This shit is hilarious to me already. So he puts out a video on, well, this is exactly what I would do with Palantir. I'm like, why don't you say this is exactly what TJ the Will Deal did? And now I'm telling y'all that this is my idea. So what happened is I was like, the only thing that I would be comfortable doing right now, this was day one with Palantir, is I'm not interested in buying the shares because I think the chances of them going down are a little bit higher than the chances of them going up. So what I would do is I would look to buy some leaps. So how much would I be willing to invest in those leaps? Like what kind of gamble, if you will, would I be willing to take? And I'm like, I'm willing to do 50 leaps. I did 25 and 25. So I ponied up 103 grand right there. You guys can see that.
And a leap is a long call for those that don't know what it is. So you're betting Palantir will be above 65 by January 2027.
Yeah. So let's feature this thing right here. We've been hearing about this pullback for a while. It's all a dream. Ha ha ha. Put that on there. Put that on there.
But what?
There's a Dragos. Put Dragos' comment on there, one of your members.
Okay.
I think Palantir is going to go up, going to go down at some point. But I also believe that it could go to 100. So I was willing to make a bet that if it goes to 100, it's not going to go without me. You follow me? So even though I think that the shit that they talk about in this boring ass book right here called The Intelligent Investor that says shit like valuations matter, I think that that is real. But sometimes that shit goes out the window because stock can be in the voting machine phase, a popularity contest. The sentiment is amazing. And that euphoria can last a lot longer than TJ can be solvent or maintain his emotions in check. That's just the reality of it. And right now, dude, Palantir is winning in that stage where it can do no wrong.
For now. And that's how the market's perceiving it.
Clark can go sell $1 billion worth of shares and y'all fucking make no excuses for it. He deserves it. He's been in it for a while. He deserves to get paid. All the bullshit, bro.
I mean, he does. He does.
Really willing to scrub his fucking balls. Palantir can do no wrong. Clark can do no wrong. Think about it. But
I mean, dude, I'm just saying mathematically, he sells and the stock doesn't go down. That means the demand is ridiculous.
Bro, that is pretty freaking bullish for the stock, right?
I would say so. Yeah.
So I was like, I am not willing to sell these shares for about $1 million profit and not maintain any exposure in the stock, because whether I believe it's warranted or otherwise, I think this thing could easily go to a $250 billion market cap. I think it's that dude. You know what I mean? I think that it is him, so to speak. Like, this company is legit, bro.
It is him, but it's not him's, baby.
It's not his. This Amazon thing, bro. There was another company called GoodRx. You remember GoodRx?
Yeah.
Got its ass kicked the minute that Amazon said it was going to go into that space.
Yeah, I think Dwayne Reed bought them, Walgreens. I might be getting that wrong, but yeah. I mean, Palantir does not have an Amazon trying to come in and take their lunch. That is
yeah. So, dude, I was like, I don't understand this shit. It doesn't make any sense to me. But call it the fear of missing out. I call it just being practical. This thing's euphoric. This thing's going up and to the right. It's been going up and to the right to the tune of about 250-60% for the year. And I've been along for that ride, but now I'm no longer able to because I put a ceiling on my gains, right? That's what cover calls can do for you. And mathematically, it just wasn't making any more sense to me to continue to roll them it, because this is what I found out about myself. I don't want to be the guy that says, hey, I used to be up $1 million on Palantir, but now I'm not. So I didn't know that about myself. It's something that I learned very recently.
Right.
Because I created this, what I was going to do with Palantir over the weekend, because I needed all the numbers to not be moving. And let me just look at this thing and let's go solve this, algebraic equation, if you will. Yeah. Like, I needed to solve for X. I want to be involved in Palantir. The $45 cover calls aren't causing me any pain. Those are still manageable. So I want to be long 4,000 shares. And I want to buy the right to purchase an additional 5,000 shares at $65, which is a price that I'm not willing to pay today. But I'm willing to pay money for the right to control those shares, right?
And again, real quick, if you bought 5,000 shares outright at 60, you have to pay 300 grand. You bought the leaps for 100 grand. So you're controlling it with 2/3 less the amount of cash needed.
But the cover call premium that comes in from the leaps is the exact same as the cover call premium from the shares.
Right. So exactly, Eli Too Smooth, he is doing the poor man's covered call by covered calls using the leaps that he has right now.
So I was like, okay, I need to get a rebate because I feel like I just totally overpaid because I think Palantir is overvalued, right? Like, I mean, I had to come to all of these conclusions. I was like, dude, it's expensive, it's overvalued. Benjamin Graham's a fucking idiot. He don't know what he was talking about. All that shit, dude. Like, all of it went out the window with our beloved Palantir. This is all the self-talk. I'm just giving it to y'all the way that it is.
And I like this here because you're managing, $10 million, but think about the big hedge fund guys that are doing all these fucking mental gymnastics trying to figure this out as well. Yeah.
It's tough. So I was like, okay, this is what I want to do. I want to I got to solve a riddle. So, but what's the riddle? I was like, I want to maintain exposure. I still want to be invested because I'm not invested. I'm no longer looking at this thing. And I was just never a part of the big move because I think we've had a big move, but it might pale in comparison to the move that's coming down the road.
Yeah.
Because I think that it's that company. I really do think that it's that company. That's the only reason that I've been in it, right? But I was like, there is such a thing as being smart, being prudent, and also protecting the portfolio to the downside. I think it makes more sense for me to sell 20,000 shares, buy the cover calls back, immediately sell the shares, get into another $1 million in cash, because I can go and sell cash secured puts with that money on the miners and pick up $50,000, $60,000 per month. So in 3 or 4 months, I got another $250,000 that's on the bottom line with my skill set and my temperament and stuff in the market. And now I'm working that money again. Whereas over here, the money, it's capped out. There's nothing else that it could do for me.
And at the same time, if Palantir does go to 100, you've got these leaps that are going to print.
Correct. But if one of these days I ended up being right on this pullback, going back to Dragos's thing, let's just say, the broken clock's wrong twice a day. It's that scenario. And this thing were to actually go back down to like 40 to just chill out a little bit on some sort of somebody acting like an idiot in the Middle East or China or something, because there's things that could happen, right? These black swan events, they happen. And this thing were to tank like $40, I would be very, very happy to go buy the 20,000 shares back at $40 and then call life good again. Because I have that liquidity still.
So it's kind of a win-win. If the stock goes up, you've got the exposure via the leaps, and you can always exercise those leaps if you really wanted. And if the stock just stays flat, you get to take all this cash that you freed up and go do what you do best, which is selling puts.
Yeah. So I was just like, okay, cool. My wheelhouse is puts. I do better with puts. It's literally responsible for 90% of the premiums in the portfolio, not covered calls. Cash secured puts is my bread and butter. So let me play to those strengths. And then let me just maintain exposure to Palantir via these leaps. And remember when I was doing the DCA thing, the 500 shares at the time?
Yep.
It literally was a coin flip when I started that on your channel. Because I had told myself I was going to buy 10 leaps at a time or 500 shares every Friday on your channel until I got to the goal. And I was kind of hoping that it landed on leaps. So I would be in a much better predicament had I not bought those 500 shares at a time for 6 or 7 weeks, because that went on for a while, if it would have landed on heads, but it landed on tails. And it literally was a coin flip situation, dude. It was funny. I did it here on the desk, and I kind of wish that it would have been the other way. And then I would have already had all of these leaps at much better prices, and I'd already be up 100 or 200% on those.
And it was funny because you were just buying them at 36, 34, and people were like, hey, that's a little expensive. Well, yeah. I mean, obviously, we've seen.
But that's the thing, is we don't have I call it the crystal ball syndrome, right? Everybody has the answers to the test, and now everybody's an expert. Yeah. I didn't have the answers to the test. I thought that Palantir was pretty damn expensive even then. I thought Palantir was, let's just go back to the origin of this thing. When I bought 10,000 shares in the $14 range, I thought I severely overpaid for them. That's just a reality. That's just where I was at the time. You know what I mean? So I think whenever you go beat yourself up because you already have a result in hand, you have the answers to the test, you got to go back to what was I thinking? How was I feeling when I first got into this situation to begin with? I remember ponying up 5,000 shares twice over in the 14s thinking, dude, you're a fucking idiot. Like, why are you buying Palantir at these levels? Yo, it doesn't even make any sense. Like, that was all the stuff that was going on in my head, but I did it anyway.
Right.
And then now I'm like, I can't believe you're going to be an idiot again and buy 50 more leaps. You're going to buy 50 leaps on this company, something you should have done from day one probably. But now you're going to do them at these levels. But I was like, well, dude, I'd rather overpay for leaps than overpay for shares.
Yeah.
And then I can still bring in the cover call premium. So now I'm running the PMCC campaign. So you essentially have these shares right here. And I was like, well, let me pick a strike price that for sure not going to get contested. And this is where Palantir is still showing me it's that guy, right? And Palantir's like, well, we'll see about that. So I collected a cool 33.25 and 2,600. I was feeling really, really good about it because I got a rebate on the 103 grand, 104 grand, whatever it was. So I'm working my way to give myself a better deal on those leaps by bringing some money through the door. And then now I have an obligation to sell Palantir at 65 bucks. The issue with that is I don't own those shares yet, right? So I would have to deliver these shares. So in no way, shape, or form can I have these shares get exercised. So I would have to keep rolling and rolling and rolling and rolling and rolling. And if this shit went up to 120 bucks and I'm still rolling and rolling and rolling, y'all were like, oh, that sucks. Not really, because then at that point, I would just exercise the long calls and then sleep easy at night. And
so these leaps that you have, you are selling monthly calls against long-term leaps, essentially.
Correct.
So what happens?
I try to bring in like 50 or 60 of those 1,000 that I spent on those.
So what happens if Palantir goes to 70 by the expiration on the covered call? How does that?
I'll roll. I have to roll these early and often. So the minute that this touches my strike price, I'm rolling. Normally, I wait till my break even, but the minute that this thing touches my strike price, I'm putting another 2 months on it and going to like 70, 72 and playing that game. Even if I'm losing a little bit of money on the covered calls, it's irrelevant to me because the leaps are printing at that point.
And what happens if you don't do that? Like just for a thought experiment.
Then they would exercise you. They would exercise your long call because you have to make good on those shares just to turn around and sell them at 65.
Gotcha. Okay.
But you don't want to be in that situation.
Yeah.
You don't you just don't do it. So this is the reason that people love the 4-man cover call campaign is because it's very capital efficient. So it's low capital, but it also requires higher knowledge and more management, if you will. So if you don't have like a lot of time on your hands, I really don't think that the PMCC is for a lot of people. You know, the cool thing about share submit is they don't expire typically. I have been involved in a couple companies that went to zero, so that does happen. But I'm saying typically they don't expire, and they're certainly not likely to expire in a company, you know, the quality of Palantir. So what do you think, dude? I feel like I maintained exposure. I still got the 4,000 shares that I'm long and strong on. I locked in, you know, call it a $750,000 win.
Which congrats. That's a decent amount of money. Right?
I'm liquid. But I also had the I don't know, the foresight or whatever you want to call it to say, hey, this thing just doesn't make any sense to me. But that doesn't mean that it can't make dollars.
Well, so here's the question. So I like this. I think it makes a lot of sense. But some people in the chat said, what if you just rolled for a debit those 45s to like 90? And
beautiful question. I was hoping that somebody would say that would. I was hoping this question would happen. Thank you guys for that. Whoever was in the chat. Salute. Because I wasn't willing to ride the shares back down. I learned that over that weekend.
What do you mean by that?
I wasn't willing to be up $1 million on those shares and only be up like 300,000 if this quote unquote correction in the stock price happened. I wanted to lock in the win and free up that cash because any money that I could have gotten on those shares, I feel like I'm just going to go be able to get it on my beloved right now on cash secured puts because those are paying me annualized returns of like 70-80% right now at levels that I'm very comfortable with. So because I had a place to pivot with the money potentially, it took a lot of that FOMO off the table for me, and I just I wasn't willing to ride the shares back down to like $30, and I just wasn't.
And because you got those leaps, it is working out because TJ, we just passed $64 on Palantir.
Ring the bell. I just posted on X yesterday saying I'm finally winning on covered calls on Palantir, and freaking Crossroads goes for now.
Dude, this is something I don't think anyone has ever. I was going to curse. I don't want to curse. Anyone has ever freaking seen in their life outside of Tesla investors in 2020.
Oh, Nvidia.
We got him. Dragos, thank you, brother. You didn't have to do it, but thank you. We got a gifted 50. 50 of you guys just got gifted a membership by Dragos.
Yeah, if that has anything to do with the Rocky movie, because when I saw that cool name, I was like, from the Russian that killed you. You haven't seen Rocky, have you? Admit I can see that look on your face.
I mean, you know, I learned about rocks in fourth grade science class. Like Sylvester Stallone, right? He's in that.
Ivan Drago.
Shout out to you, Drago. Thank you for the 50 gifted, and congratulations, everybody. This has been one of the most remarkable runs, first of all, of 2024. Second of all, of the last couple of years. And Palantir stock now, year to date, folks, is up 287%.
It's silly, admit. It's
silly. I don't even know if insane, crazy, wild. I don't know what the word for it is anymore. What I do know is that this fucking community has been around for 4 years. We went through hell. I just guessed.
The Leonardo DiCaprio.
Yep. We've been around for 4 years. 2 years were hell. A lot of people stayed during those 2 years. And retail got this right, guys. Retail got this right. Not saying it's not expensive. We just had a conversation with TJ for the past 30 minutes why it's expensive. But as TJ said, sometimes it doesn't trade on those core metrics that Wall Street cares about. There's more to it. And right now, the thing is more people want to be part of the story, and that's why we're seeing Palantir get this one.
You know how at Tabbits, and there's people that throw these little terms around, like toss these terms around called price discovery?
Yes.
So for the people in the community, because you have a lot of, you have the biggest Palantir community, right? These guys know about this company very intimately. But for the average Joe investor, institutions included, it's still very black boxy for them. They're still barely discovering what Palantir is, and then more importantly, what Palantir can become still. So they're very early in that discovery phase. You know what I mean? Yep. So, dude, I don't think that, and then, dude, this is a new stock for a lot of the people in their portfolio. Like, they got in the $30, $40 range. Some people are obviously, people are buying for the first time at $64, guys. That's why this shit keeps going up. Think about that. Like, a lot of people don't think about that. Like, there's people that are brand new shareholders for Palantir right now. It's kind of crazy to think of because some of these people have been rocking with you for 3 years or whatever. It's new to a lot of people still. A lot of new investors. It's new to them.
And price discovery is a real thing because, look, at the end of the day, the volume shelf resistance on Palantir was 45. That is where the price discovery was supposed to happen. That's gone. And now it's like, well, where is the resistance? Well, there is, as of now, with all the catalysts lining up, institutions coming in, there is no resistance. And so that means the price could just theoretically go higher and higher, even if the market cap or whatever doesn't necessarily make sense. And what I think that means for a lot of investors that aren't sinking undercover calls is if you don't want to sell it, as TJ says, if you're actually long the stock, right? You don't want to sell it. You want to keep it for a while and you don't want to buy more, then you just chill out. And you let other people FOMO into it or buy into it, but you get to have that position. And if it runs down 40%, okay, you get to get cheaper shares. If you believe in it, ride it back down to 40 or 30 or whatever and ride it back up. But the momentum is on Palantir's side, and I don't think that's going away anytime soon at all.
Yeah. So I think the hardest thing for me, Amit, was realizing that I could only afford to be long the 4,000 shares.
Correct.
Because those were essentially the original shares. And then everything else, I was like, well, I need to kind of treat it as a swing trade that wasn't meant to be, because I need to lock in this win so that I could just protect the portfolio to the downside as well. Because whenever we got to the $10 million mark, something happened. I like the way that it looked on the screen, and I don't want to be the guy that had 10 and now I have 7 or 6 because I'm being stupid with my rides and SoFis and not taking a profit at some point. So I wanted to be like, hey, well, it's okay for Alex Karp to sell shares. Maybe it's okay for me to sell some too.
Yeah, and that's fair.
In my mind.
Right.
Because there's a part, dude, that it was weird. Like, oh, I don't want to be disloyal to the community and all that. I'm just saying that I'm giving y'all honest self-talk, dude, because y'all are going to get in these situations where you feel like you got to do something that's good for you and your family. But then it's like the virtual family that we have here, right? Because we're invested in the chat and stuff. It's like you guys become an extension of family to a certain. I feel like I spend more time with the people in my chat than my wife sometimes. It causes problems at home. Trust me.
I feel you. I mean, there's a lot of people that spend a lot of time every day with me, so it's fair.
Yeah.
TJ, how would you answer this? 7 covered calls for 64. You rolling? It's time to roll, right?
Yeah, dude. Yeah, are you kidding me? Yeah, it was time to roll yesterday, probably. Look at this Palantir. Roll it out 2 or 3 weeks and put a 68 in front of it at least. Please. Fucking Palantir, bro. This thing is just insane, bro. But it's fun, dude. It's so entertaining. But it's also, y'all, I don't know. I was watching somebody, it might have been your channel, and somebody was talking about imagination.
Yeah, it was. We did a segment on the channel. Yeah, we did.
Okay, yeah. So it reminded me of that Beatles song called Imagine, because it's like I only see what Palantir is, but it's like my dad always uses this analogy because my dad's like, he's like a philosopher, bro, and he's always like trying to coach me like 15 years ahead. He's like, son, you're the swimmer in the water. All you can see is what's in front of you, but I'm in the submarine looking at the big picture, and I'm telling you there's stuff way in the distance. And I think that that's how the real big money is now starting to look at Palantir from a different lens, whereas I've just been in the trenches of like trying to understand what in the fuck ontology is and all this other shit, like immersed in the stuff that I know. Like, dude, I even went live during AIP Con on accident. I didn't even know the shit was going on. Somebody was like, hey, are you going to go tap into that deal? And that turned into a 3-hour stream when you were doing the little interview thing, looked like ESPN or whatever.
Well, dude, like I think in life, and I know we're not talking numbers, guys. We're talking euphoric Palantir because new all-time high. You got to give us some room to talk like this. In life, things that are worthwhile deserve a premium.
Yeah.
It like, and maybe this is too big of a premium for some people. That's fair. But in life, you pay for something that is special and differentiated. And from my understanding, even though you're not in the weeds of it, you understand AIP, these boot camps. This is different. This is fucking different. And the market, the big money that you're talking about, they've got a lot more money than all of us combined in the chat. We're talking about hundreds of billions. They're ready to pay for it.
Yeah.
They're ready to pay for it.
Well, I think what it is, dude, is, I manage a small hedge fund and I'm opening a larger one. You don't want to be the manager that doesn't have any of your portfolio, bro. You don't want to be that guy. I'm just saying, because you got to give these reports to your investors, and they see all the holdings, they see all the moves. You know what I mean? And you don't want to have to explain to them why you're not in one of the hottest stocks on Wall Street right now.
Yes. Yeah. And this is the hottest stock. This is hotter than NVIDIA. It's up more than NVIDIA. It's up by 100% more than NVIDIA. Think about that. NVIDIA's a $3 trillion company. Palantir's outperforming it. And Palantir's trying to go for 65 right now. Let me check the resistance, guys, because greed sometimes is not bad. And we're at 64.5. 65 resistance is 18,000, which is not a lot. 18,000.
Greed is good, right? That's from that movie Wall Street, Michael Douglas, I think.
Yep. Dragos, thank you for the $20 super chat. TJ, I'm trying to catch up to you. I've made my first million. Congrats to all. Love the team. Love you, Dragos. Thank you.
Dragos, appreciate you supporting him in the channel like that, and that's awesome.
Yeah, man.
What a cool name too. Did he say if he was part of the Rocky thing, or is that just like really his name?
I don't think Dragos. Let us know in the chat where you got that name from. I don't know if he told us.
Anyway, let's get back into it. There's a lot to cover, but that was the thing, dude. I'm still team Palantir. I'm freaking long. I'm strong. This thing doesn't make any sense to me, but this is the lesson that I learned.
Well, can we look at your leaps? How much are you up on the leaps? Can we look at that? How much are you
just because it doesn't make sense, don't forget to make dollars. You know what I mean? Like, that's the big thing here. That's the takeaway.
Yeah.
Is that no, that's the covered calls. I have to roll those here at some point too, huh?
Yo, we got to call your name TJ the rolling covered call deal, not the wheel deal anymore. Like,
so okay, how much covered call, dude? I am surprisingly up 15 grand on these things, bro. It's silly, Amit. It's absolutely silly.
Again, guys, remember 69 is OpenAI's market cap. So I'm just saying, I know people don't love that analysis on Palantir's valuation, but if the market's comping it to OpenAI, 69 is where they might want to get to. Just saying, that might be true. Steve is definitely going to call on tonight's show, and he'll be a little upset. So tune in on the market close to get Steve's reaction. Steve's gonna be cursing, bro. You thought I was cursing? Steve's gonna be cursing on the market.
Steve's mad that he didn't get in with me on these damn leaps, right? These leaps might end up proving to be the best deal I ever made.
Dude, and the shorts right now, could you imagine shorting it at 55 thinking it was stupid? It's at 65. Like, do you cover now? And do you send the stock even higher if you cover? Like, I mean,
I don't know, dude.
It's a hard position.
Dude, I don't have the moxie. Like, I won't short a stock. That's just not the game that I'm in. And then it's just, we talk about unlimited loss potential. You know what I mean? Everybody, you sell cash curve, you go to zero. Yeah, but that's very unlikely. But this thing can go and then at some point you got to make good, and then you're going to send the price action even up. So now you're going to have to move on to another ticker and accept that loss. I have ways to manufacture to win on tickers. Like, how do you do it after you got your ass kicked on a short on covering your short?
It's hard to recover, bro. It's really hard because they're like that. That's just money you lost. You can't get it back by writing a set of covered calls or writing some more premiums at a different strike. You can't do it. Jonathan, thank you for being a member. Now I feel dumb for taking profits on Palantir, but we are riding the rest of the moon. Congrats to the shareholders. Jonathan, I know you're in Bitcoin, and so you've been doing very well on Bitcoin regardless. So thank you, John, for being a channel member and being part of this community and this stream. All right, TJ, we got some other stuff to talk about. So can we go to Robinhood? How's our Robinhood doing?
Yeah, pretty flat still today. I mean, down a little bit.
I don't think we have much to manage on this position, right?
There's no, so everything's free 11/29. So let's talk about the stuff that we got that's expiring. So we had the cover call, obviously going to be underwater on those because it's Palantir. But then I sold, this is stuff that I did over the last few days, Amit. So what do you think? This one is proving no bueno. I got 100 cash secured puts on SOX sale at $28 for 11/29. Already
That's
in the
semis ETF, right?
Yeah, and I think it has like NVIDIA. Here's the thing, I don't even know. I think it has NVIDIA, AMD, and Intel. I think it has that kind of stuff in it, but I'm not even sure, to be honest with you. This was just like, I've been playing this ticker at 33, made a lot of money. I'm like, well, surely I'll make a lot of money at 28. And then now that's not really working out. But until it reaches my break even, which is 26.93, and there's no rolls involved here, these are initial. You'll see that it was 100 contracts initially, got the 10.7. I'm not doing anything on a rolling unless it breaches 26.93. So that's a nothing burger right now. It doesn't look good on paper, but it didn't really stress me out. And then Celsius, this is one that I've been in off and on, wishy-washy. I say that I'm willing to get long and strong, but the reality is I think I like the drinks a lot more than the stock. And but I did sell 100 cash secured puts at 25. Because I was just like, at some point, this has to be it. Like, the company's still growing. They still have a pretty good balance sheet. They're still going into other countries. So it's still technically pretty early in this company. And gun to my head, if I had to take ownership of the shares at $25, I feel like I can manufacture the win. So this was on November the 11th. I sold them for a month out, essentially got $9,200. Tied up quite a bit of money, though, right? That's 250 grand. So what do you think about Celsius at 25? I know you're not the biggest fan of this company, but I mean, they do make some money and they do sell quite a bit of those drinks. They're allegedly a little healthier than most. Again, I think all of that stuff is allegedly. I think that the RFK, what's his name? RFK, the character, what's his, the dude
RF Kennedy. Yep.
Yeah, the dude that Trump appointed, I don't think he's good for the energy drink space. He seems like one of those Kel guys that hugs trees and shit. So I don't know that he'd be good for the energy sector, the energy drink sector in general. We'll see.
Yeah, guys, and we'll keep an eye on Palantir if we push through that 65 level. We are at 64.84 right now. I don't like Celsius. I do think the bottom should be in because it's down so much. So I don't hate the 25 strike. I definitely don't hate like 22, 23 adjusted cost basis. Their last earnings really sucked and they just need to get back to growth. I don't know if this becomes a $10 stock, dude. I mean, like the brand is still relevant, right? People still drink it.
So I'm gonna keep rolling, just so we're clear. I'm gonna keep rolling until I can get out of it. I'm not gonna take assignment of these shares.
Yeah.
It's a cash grab. It literally is just, I'm there for the premium. That's it. Hopefully it holds up this long and then I could do them again at like 22. And every time I'm doing them, I'm a little bit more comfortable because the price is starting to get a little bit more attractive. But I thought the last earnings report was a lot like Enphase. It was a freaking snooze fest.
Yeah.
And nothing to get me that excited. Hell, the Intel earnings were more exciting, and that's not saying much. The bar is pretty low there. This one's one of ours right here. What do you think, Amit? Hood, 30 puts for 12, 13. We're pretty much right where we started. You know, we did 50 contracts, got 5,900. We're down a little bit. They're worth 6,250. I think that we just ride this thing out and see what happens.
Yeah. Nothing to manage there. I think we're good.
Yeah, pretty simple. We got the Intel. This is one that I did. I decided to double down on Intel at $24, but it turns out that I don't really want those shares at 24. 22 is the acquisition price target. So I'll have to manage these for a while if I need to manage them. And this was on November the 11th. I sold these and got 14.6. And now they're currently worth 21 or so. So I'm in the hole a little bit, but I'm not going to do anything unless it breaches that break-even price of 23.27.
And you still have your covered calls on Intel?
Yes. So I'm running a version of the strangle. I've got them at $28 for 12.27 and up pretty nicely on those right now. And the reason I love the covered strangle, Amit, is because two things can't be true at once when you're doing the strangle. You can't be losing both on the cash secure put and covered call at the same time.
Right. Right.
So this one is working out, and I might be in a situation if I get away with the 24 puts that I lowered the adjusted cost basis enough that maybe the next round of covered calls, I'll be very comfortable at like the 27 or even the $26 range. And now I'm bringing even more money through the door because I do think that Intel is going to end up being something that I get out of probably in that $28, $29, $30 range, just because I'm raising cash, and I'll tell y'all why in a second.
Right.
I'm raising cash, but I want to be in Intel, but only be a cash secure puts. I don't actually want to own any more Intel shares, but I want to make a little bit of money on the shares that I have. I'm considering even doing some leaps to maintain some exposure to the upside on that aspect, but I don't want to own, I don't want to have the investment on the actual shares, not right now, because there's something else that I want to add to the portfolio.
Okay.
What else do we got? My degenerate play. Oh yeah, so I went real heavy on Riot cash secure puts.
So the logic on this was the Trump pump faded a little bit, so you thought it's good to kind of double down on.
Yeah, and I just did. They're doing better. Like the company is starting to perform better, and they're very open to this HPC AI deal. That's like the new craze for the Bitcoin miners, a different way for them to make money, not just mining Bitcoin. And Riot has a very attractive infrastructure for that because of the way their whole power situation is set up. So got the 110,000 shares that are doing very well. They've come down. We're up like probably 700 at one point when it was like at $16 there for a hot minute. But then now I tied up 860,000 in collateral, 400 cash secure puts at 9 and 500 cash secure puts at 10 for 12.20, because I do have a ceiling on this investment here. I've got all the shares for sale at $20 for January of 2026, and I expect Riot to be way over that, but I'm okay with it because I can't afford to own these shares and not bring that money through the door on the covered calls.
Yeah.
So there's that. So that's something that people always talk about. Why would you do that? It could run all this stuff. Because it's just a stock that I'm not willing to own without bringing in premium, because just like you think that it could go to 20 or 25, I do too. Well, it could also go to 5. So I got to bring some money through the door. You got to know what you own, right? You got to know what you own. So that's pretty much all of it, Amit. We're sitting real good on SoFi. We're sitting real good on Riot. Tesla, that one's good, but it comes down to this right here. So now we're down to 8 positions. You see those right there, Amit?
Yep. Oh, so you cleaned up the portfolio.
Big time.
And the strategy was going into 2025. Also, one question from the chat: are you raising cash for like a crash potentially, or just you want to be more liquid?
Yeah, no. So yeah, I'll answer that question right now. So I've looked at everything, and I literally listened to the last earnings reports to make this decision of all of these companies right here. And I've decided that my number one stock for the next 18 months is Amazon. So I wanted to raise cash so that this can become a 10,000 share position. because I think Amazon's going to have a 3 in front of it in probably 18 months or so. And I call it the Amazon savings account, the glorified Amazon savings account. I want a place to where I feel like I could literally just hide money. And Amazon was the place that I feel like it takes some volatility out of the portfolio for me.
Yep.
The premiums are still pretty decent, believe it or not, on the covered calls. So
are you getting 3% on the covered calls, or 2.5 or?
No, so I'm doing it different. I'm playing it from behind. So I have all of these shares for sale at 200, and every month I add another month to the contract, and I'm getting a little bit of money in premiums, but I'm increasing it to 202, 203, 205, and I want to be in a position to sell these shares anywhere from 250 to 300 a year and a half from now. But I want to be in the money the whole time and not too far out. That way I reserve the right to turn this all into cash if something that pays a lot more premiums goes on sale that I'm just as excited about. So that's why I call it a glorified savings account. And it's just, I'm hiding money. I'm literally I'm looking for places to hide money that I feel really, really good about. I wanted Tesla to be that stock, but there's just so much damn volatility on Tesla. And then I exercised the long calls already, and I'm sitting on 4,000 shares. And I was just like, it's enough. And I'm already babysitting in the money cover calls for the next 30 years on Tesla. So I got 280 covered calls January of 2026. And in 6 months, I'll put a 320 in front of it, kick it down the road. And I'm going to play this game for the next 10 years or however long, because this is my favorite stock in the market. But this was a little different than Palantir, just because I feel like I understand this company more. I was willing to ride the roller coaster. And I wasn't, and also I was never in a situation where I was up $1 million on the position either, right? Because it's been sideways for the last couple of years. So that's the way that I'm playing in Tesla, because all of the money that y'all think that maybe I'm leaving on the table and all that, it's all over here on TSLL. Because I've got the largest cash secured put that I've ever done as far as a backstop trade, and that is 2,500 contracts at 573 TSLL for January 2026. They paid about 350 grand on those. So that's my other savings account in the portfolio. I've got the Amazon savings account, and I've got the TSLL savings account over here that paying a lot more money than Amazon. But I was like, do I really want to have 5,000 cash secured puts? I thought about it. I thought about doing 5,000 cash secured puts over here at 573, but even that was a little silly for me.
Right.
So that's all of it in a nutshell. What do you think?
I think it's fair. I like that you cleaned it up. I think 2025, you got a lot of cash now to deploy. I like SoFi, Tesla, Amazon, PayPal being their ride to play on Bitcoin. And I mean, if we think Bitcoin's going to do well, which I think it will, then that should print really nicely. Intel is a nice recovery play. At the end of the day, they're still getting some more momentum. And then SoFi, I mean, look, I think this thing's headed back to 20 in 2026 if financials can be the tailwind. And if, as long as they keep doing what they're doing on earnings, the sentiment has changed. And this one should get you a couple million if it plays out.
Yeah, so look at it. So we're up 930, right, on the shares. So all that opportunity cost talk is out the window for now. And then we've got the 6 strategies. So we got shares for sale at 15 in March, shares for sale at 15 for January 2026. So those are problems that I'm okay with, because the lesson that Palantir taught me, and before Palantir Meta taught me, was this is the proper way to set up the position if you are like me and you want to sell aggressive covered calls. It's okay to limit your upside for the static cash flow. That's cool.
Yep.
But this is your retractable roof on the ceiling. Buy the leaps. Do yourself a favor. Take some of those covered call premiums and buy the leaps, but do it early, the way that I did on SoFi. So I've got the 200 leaps at 7, the 200 leaps at 5. I'll be exercising those probably November, December of this coming year. And then I've got the flips. I've got the 500 at 10 and the 500 at 15. Now, if Noto starts looking like he's going to hit his metrics, then these potentially could go from flips to, hey, let me exercise these and open a bigger position. And then I could potentially rebalance the portfolio by saying, hey, let me just look at just letting these shares get called away, if that makes sense.
Yeah.
But those are also, you got to weigh the taxes, bro. Like that Palantir thing, kid you not, like make no mistake about it, it created a huge ass taxable event.
Well, you took a loss on Celsius too, so that helped get rid of some of it, right?
No, and Enphase.
Enphase. Sorry, Enphase.
Yeah, Enphase helped out. Celsius wasn't much. There's like 7 grand, so it wasn't really going to move the needle. There was a couple of other things. Oh, Open Door. I think I lost like 7 or 8 grand on Open Door. So I cleaned up a lot of little stuff that I was like losing a little bit of money on just to, because I wanted to run the report at the end of this month so that I could know roughly what the tax situation was going to be looking like. Did you kind of like to do a nice little guesstimate, if you will?
Yeah.
So that's why I wanted to do everything early. That way the report comes out real clean when I run it, like the first week of December or whatever, to just get an idea of what kind of damage we're going to have to deal with the IRS. And that's why I built a real big cash position as well, Mitt, because I don't know exactly where the money is going to come from for sure, because I got to settle taxes. So that's why I have more cash in the portfolio than ever before. Again, guys, this is new to me too. You know what I mean? So I need to make sure that the portfolio is liquid.
Right.
Because I have other ways to satisfy Uncle Sam's the responsibility to Uncle Sam. But what if the family's like, the wife and I get together and we're like, hey, well, let the portfolio fix the portfolio, right? It caused the problems. Then I need to make sure that I'm in a situation where that $2 million withdrawal could come from there and pay Uncle Sam his due.
Yeah, and Uncle Sam is not going to negotiate. So that's
real.
fair to have that. Yeah.
So what do you think about the 8, man? I know that you'd probably pick a different 8, but what do you think in general? The only thing that I look at now is just the sizing of the 8.
Dude, if I had to pick 5 out of the 8, it would be SoFi, Tesla, Amazon, Palantir, and Hood. So those 5 to me are super solid, and PayPal would be an easy number 6. So yeah. I think your 8 are really strong. I think they all have different strengths that they can navigate from. And the fact that you have cash ready for 2025, that's the most important part right here. And you have leaps in case the calls get under trouble.
So one of those goes out. This is the one that's kind of like the number 1 contender right now. And I keep studying and studying and studying. It looks like they're going to have to do a capital raise, by the way.
Boeing?
I'm pretty sure they're going to have to. Like, just if you look at the balance sheet, I'm not like the best person for financials, but I understand like credits and debits. Yeah, I don't think they're going to have enough money, dude. They're going to have to do an equity raise. So I think this thing could temporarily probably go to like 125, 130 whenever that news cycle happens. So I have cash secured puts all the way in March already, but at 145 because the acquisition price target was 140. So I'm like, well, let me just set it there. But if it does go to like 125, 130 flash crash or whatever, I want to scoop up 1,000 shares and start building the position, and then I'll manage these. So that's kind of that's what's on the horizon, if you will.
What about Rocket Lab? What are we doing with that one?
Yeah, so I'm not going to add Rocket Labs at these levels in this portfolio. I own them in Webull. I got 20,000 shares of Rocket Labs at like under $4, and I didn't add any more down there. I'm certainly not going to add any over here. I just don't understand the space enough, dude. And then there's also this thing called interest level. I wasn't the kid that played with little rocket chips. No, I'm just saying. It's real hard for me to listen to any of that stuff because I'm just not excited by it.
Yeah.
Like I'm one of those that sometimes I'm not even convinced that we went to the moon. Like I'm that guy.
Yeah.
So I don't know. What else do you think? So I ultimately want to end up on 10 because it's like my whole thing is find your 5, right? So I feel like I have the 5. But like finding the second 5 has proven to be very, very difficult.
So I don't like this one, but I'm assuming the premiums would be amazing. But HIMS.
Yeah. What do you think, Amazon? Do you think that's a real thing for HIMS, or is HIMS loyal following?
I talked to a couple of people last night, bro. They are not. I talked to one guy who is he only invests in small caps. Like he studies them day in and day out. And he said a small cap trying to compete with Amazon is a death sentence. And so he is so bearish on the idea that, people are calling him, they don't understand his personalization. He's like, dude, fuck all that shit. Amazon is not going to let them just like easily continue what they're doing. So I don't know how true that is, but from his perspective, he's not excited about that one. So I don't know if it's worth the premiums.
Yeah.
I don't know. It's tough.
When's this company going to be profitable?
Hims is profitable. Oh, Rocket Lab.
Yeah, Rocket.
They're 10 cents away. I think in the next 2 quarters they get there.
Yeah, but don't they have like not enough money on the balance sheet to where there's going to be dilution and stuff?
I don't think so. They already diluted a year ago and they raised like 300 million. So I don't think they're in that position. I could be wrong, but people know in the chat, Rocket Lab has enough money to not dilute, right? We got Rocket Lab people in the chat. But SpaceX raised the 250 billion today. I know that's not Rocket Lab money, but it does set a TAM that is pretty aggressive for what Rocket Lab's going after.
No, agreed. I think it's awesome, and I'm glad that I have 20,000 shares there. I wish I had more, sure, but again, I don't know enough about it, and I'm not interested in it. Like, I'm just not. Sometimes I'm just not interested in stuff, and it's just I don't know why. I mean, why do you like blondes? Why do you like brunettes? I don't know. Like, I mean, for whatever reasons, God didn't create me to give a shit about the space program. I mean, I don't want an asteroid to hit us, so make sure the nerds are on it. But I mean, I don't know why. It doesn't excite me. And the other one that I try to get excited about, because a lot of hype around it, are these battery companies. Like, bro, I tried with Enovix, and then there, one of my members was like EOSE or ES something. There's another battery company out there that people are excited about. That's like $2. And I'm just like, did I still have anyone wanted to put the ticker on the screen for myself?
Have you heard of Sava? Thank you for the super chat, Pat P.
Well, my members told me about this one forever, dude, and I could never just even want to read a paragraph on the company. It's because when you really dig it, like you really, really dig them, and it's a lot of work. And it turns out that I'm kind of lazy.
Yeah, I don't like genomics either, dude. All this CRISPR stuff, like I don't. It's just
no, because you already suckered me on one of them. I think it was called DNA. Remember that artificial?
Yeah, but I got the hell out when it was $3. You got out too. You weren't in it for a long time.
No, dude. But what I'm saying is, I tried to be interested. Is what I'm saying.
Okay. Yeah.
Like I probably invested 3 or 4 hours of my life trying to even understand, and then when I couldn't understand, well, I certainly wasn't interested. And I was like, but maybe they have something there, just not for me. Maybe that's the little Warren Buffett in me, where I just try to stay in the things that I understand. Like he understands how Hershey makes money. He understands how Coke makes money. Like just maybe I'm a simple guy when like I'm not that sophisticated with investing.
Yeah, and with biotech, there's just so much complications on their drugs getting approved and all this. So I agree. Stick to businesses like even Rocket Lab. Warren Buffett would probably never invest in it, but we understand how they make money. They send launches into space, and they get paid for their launches. So it's a simple business model, but then the nuance of how they do that is where the due diligence comes in.
So I have one company in this screen that I don't fully understand. I don't hate it, but I've made a lot of money with it, and it's at levels that I like again, and that's Pfizer.
So do you know why Pfizer's down today?
No.
Okay, so let's do a thought experiment. Go to Moderna, mRNA. Just take a look at it.
I thought there was like 2 or 3 drug companies that were like in trouble. MDR, what is it called?
mRNA.
This is whenever we did the shots. I think this was my shot.
Okay, so this one's down 7%. Now go to LLY, Eli Lilly. You'll notice a trend today.
Yeah, because of the RFK dude, right?
That's correct. So I don't think we can touch this sector for the next 5 years, dude. Like, I mean, maybe this is overblowing it, but if this guy's not going to allow vaccines and their new drugs to be as easily approved.
Yeah, and then the premiums here are horrible, dude, because I played this game. Like, I'm not lying to y'all. I've been in this fucking stock here. Like, I've been in it, not like a lot of trades or anything, but I've made money with Pfizer, and they pay a little dividend too. I don't know if they still do. They did. There we go, dividend, $2,100. I remember it came in. I was excited too. That might have been the first dividend I ever got in this portfolio. But I sold these fuckers at $28.59 because it's one of those things that I like it from like 25, no more than 30. So I, played the game a little bit. But
what are you thinking of Nike? Bill Ackman's in that one.
Dude, that's another one. This dude just added a bunch of freaking Nike, right? He's like a lot of money.
Premiums. I checked. The premiums suck, dude.
But dude, I'm talking with this turnaround, dude. We know that capital appreciation makes more money than premiums. I'm in premium for cash flow, but the big money in the stock market is always buy low, sell high if you can do it. Yeah, dude. I mean,
Well,
But
sometimes it's fun to just blindly follow the celebrities like Bill Ackman, but I don't understand the thesis. But if we did, maybe this is a recovery play for 2025.
yeah, but on cloud is a real thing, dude. And I know that Nike's a lot bigger than just shoes, dude. Trust me, don't crucify me to the stake. But on cloud's a real thing. The hookah, is that how do you say it? Haka, Hatua. I'm saying, dude, I see those everywhere now too. And then the dude guy, the Hey Dudes, I got some Hey Dudes with the Longhorn thing on it. Like people wear that kind of crap around too. I just feel like there's a lot of other shoes that people are more compelled to put on their feet. It's not just Nike anymore.
Yeah. Oh, it's Hoka. Of course, I'm saying it wrong. It's Hoka.
Yeah.
So, no, I agree. So ultimately, I guess it's up to what Ackman's trying to get from this.
So there's another one too, and I absolutely hate the company, dude. I'm talking about like abhor this company right here. But just from from a valuation perspective, I think that that's another glorified savings account that has some substantial upside. They got crazy cash flow. They print more money than the Fed. I don't hate it. I was in it too, dude. Let me show y'all. I had a decent position in this company, but I decided I hated it too much, and I sold 2,000 shares at 142. How stupid am I? So there's that, and I don't typically like to revisit situations where I sold low to buy higher. So that's why I haven't talked about it before, because I was building a position in Google, but then it was around the time to where y'all were talking about it on Finance Junkies, dude, and you would do something and then it would give you like certain things. I want to say y'all put like little Indians on the screen or something.
It was like woke Gemini, but like that reason I don't think was a stupid reason for like a couple months. That's done now. I don't think anyone cares about that.
No, I know, but what I'm saying is I'm just very like, I'm not like super conservative. I'm like kind of like right in the middle, but I don't like the far right pushing a bunch of shit down my throat, and I don't like the far left, but I'm illogical, right in the middle, right? And I was just like, dude, this company's just getting like way too political for me. Same with Disney, like those. So I just don't like making money in those spaces. But Disney's another one that I've considered pretty heavily too, if I can get out of my feelings and just focus on trying to make money.
I don't like Disney at all.
But I feel like it was an opportunity, over here at these levels. You know what I mean? Like I feel like I kind of already missed that turnaround play, and I'm not familiar with it enough. But
I would pick Google over Disney any day. And if you do want to have a glorified savings account, I think Google's not horrible at these valuations. Because at the end of the day, Google to 250, 200, like it's probably, regardless of ChatGPT or whatever, they will slowly get there just by buybacks alone and cash flows. So I don't think that's horrible. But I think maybe you make that decision in January, February, right?
I'm not in a hurry, dude. I'm very happy with the aid, and then I'm babysitting cash secured puts now. So these could potentially get in there temporarily. You know what I mean? But anything that gets in there, if it doesn't become super high conviction very quickly, then I literally just be wheeling it. So there's that. Because I wanted to build a huge position on Archer, dude, because I'm like excited about the space, but I'm like, dude, I really need another pre-revenue company. You know what I mean? Yeah. Like I've already did. Those are just hard ways to make money, dude. They're hard ways to make money.
Okay, TG, let me get your last thoughts on this, and then you can get out of here. Walgreens, Matt's going crazy about this. Not our Matt Money, a different Matt. I talked to Chris about this, Matt, over the weekend. Or I still have to talk more in depth with him. But one of the things we're both afraid about is Rite Aid or CVS.
I've already played this game, dude.
Oh, so you've been in this?
Not a lot in this one, but it was in the Webull account. And
if this thing goes out of business like CVS and Rite Aid, I think that's the bear case right now.
Yeah. So my son used to work at Walgreens for like 3 years. So I got to know quite a bit about him because he was very interested in them as an investment at the time. But then he came home one day and he was like, "Hey, Pop, I don't see how this is going to hold up. Like there's so many people that steal from Walgreens." And there was like it looks like a mini jail when you go into like a lot of these Walgreens, dude. Like everything's behind. Like you got to go get the little key, you know, like you go to those parts of Walmart.
Yeah.
You want to look at the cool shit. You got to go find the lady or the guy that works there to open it. And then he's just like, at some point, people just get tired of paying that much money for convenience. Because you can go to your local grocery store that happens to be usually right across the way to go get the same item, like 30 cents on the dollar. So it's like, how often are people going to really just want to keep biting the bullet to shop at Walgreens? And then he said also that the pharmacy business, because my son was a pharmacy tech, that the pharmacy business at their location wasn't even profitable.
We got someone in the chat who works at Walgreens. He says they treat employees and customers horrible. Well, I mean, there are some fundamental problems. I agree with your point, Matt. It is priced for bankruptcy, and it's probably not going bankrupt. But does that mean that investors get behind the story anytime soon? I think that's the question. And I think it's risky for you, given you're managing 10 million. I don't think you put that much risk into the portfolio with this one.
What do you think about Bitcoin? What do you think about Boeing, though? I do think that they have to turn it around, but they are Americana. Like, it's only them and Airbus as far as in that sector, not to mention all the defense stuff, but they are trying to get out of the going to Mars play and stuff because they're not good at that part of the business.
No, I like it. Let me check Palantir 65 resistance, guys. I don't think Boeing's going anywhere. So I think 125, 130. It's an American company. They're a big defense contractor. 28,000 shares, guys, at 65, 28,000 shares. So I think you'll be fine, dude. I don't think Boeing's going anywhere. And if you can get it at like, what, 5-year lows, 10-year lows at 130, 160. I think COVID got to 85.
During COVID, I think they went to the 80s.
Yeah, that was the last time they had that big of a dip.
It's hard to say, man. Hard to say. I don't know, man. Anyway, I got to get rocking and rolling. Got a wedding tomorrow, and I've got to go find, I don't know what it's called. Y'all can help me out in the chat. I'm going to this place called the Men's Warehouse to help me out. But the shirt that I'm using is the shirt that I used for my personal wedding, for my own wedding. And it untucks, dude. As soon as I move around, it untucks. It's some stupid Armani brand or some shit. I think they're made for like skinnier people. The shirt was not a good fit for me, but it's too late for me to go try to find anything. This damn wedding stuck up on me. So there's like a thing where you clip the tail and then it goes to your sock. That way, it almost looks like lingerie for women or something. I don't know. And it keeps the shirt tucked in somehow. You connect it to your socks. I need to go find that. I just don't know what it is. But the guy told me at where I bought the suit. I bought this little suit at some place called Dillard's, and they didn't have it there though. But he was like, "You can keep the shirt tucked in by clipping it somehow." And I was like, "No idea what you're talking about."
All right, well, TJ, if you're about to leave, I think you might want to stay for 2 seconds to see us get 65, and then we ring the bell with you together. And
ring it in anticipation, bro. It's like the big birthday at UT, the freaking cannon.
It didn't hit, guys, for me. Oh, there it is, TJ. We just hit $65 on Palantir.
This guy in the chat says, "Go to Kohl's and get a shirt, bro." You don't know who I'm married to. We ain't going to Kohl's in this family. Dude, real quickly, do the word of the day, dude. I'm always trying to get educated.
Okay, word of the day is ab initio.
Ab initio.
Okay, I got that wrong, but from the beginning. There you go.
Oh, because in Spanish, inicio is like the beginning, initially.
Gotcha. Oh, that makes sense.
So there's always something, right? That's why the smart people, they were like, "What's the origin?" and all that shit, right? They're trying to figure out if they can make sense of it. Anyway, I got you rocking and rolling, man. Appreciate you guys. Keep up the awesome work, Amit.
Oh, real quick, hold on. Before you leave, TJ, guys, check out his Twitter right here. TJ, now 17,000 followers on Twitter. So please make sure you follow him on Twitter. And next week, TJ, what I want to do with you is I want you to take us through how to manage the wheel sheet tracker, because a lot of people have it, but people like myself don't know exactly how to manage it or use it. So I think that would be a good segment next week for us to do.
Awesome, dude. We can. You should use the tracker, Amit. It really helps.
Yeah, and it would be nice to like get a one-on-one class in front of everybody to do that.
Yeah.
All right, there's TJ's YouTube. Thank you, TJ. Enjoy the wedding. I'll talk to you next week, brother.
Take care.
Bye-bye. $65, folks. $65 freaking dollars on the day. $64.95 right now. Dragos, thank you again for another 50 gifted. I think you have that tuned up right for 65, and then you just press send. I appreciate it, Dragos. Thank you so much. Mango, Spencer, Johnny, VR Japan, Damon, all of you guys just got a gifted membership. For those that want to know what a membership is, it's just $5 a month to support the channel. This channel does not monetize in any other way besides ads. If you're a member, you don't get anything exclusive because all the content's out there for free every day. So if you subscribe to the channel, it's just to support it. And if you don't, thank you for being here every day, regardless. Thank you, Dragos, for that. Kevin, thank you for the $65 super chat. Cheers, Amit, from a channel watcher and Palantir investor since 2021. What an amazing journey so far. That's the word. That's the word. An amazing, the word is journey. And then you could put any adjective in front of it. Amazing, crazy, wild, spectacular, whatever you want to put in front of it. But journey is the word. It has been a journey. It has been a journey. It has been an unbelievable journey. Back to 65 right here. So we're touching it for a second time. The wall at 66, just to see if it's possible. I think it's a little bit of a bigger wall. It is, no, it's 5,000 shares, but there is a wall on the chart. The wall, I think, is at 65.70 is 85,000 shares, 65.70. So 65.70 is when you're going to see a little bit more resistance. Now we are at 65.15. Palantir is up 10% officially on the day. And as Kevin said, it is an incredible journey. You know, I say this every time we reach a milestone, and I've been having to say this pretty much every single week because we've been reaching milestones, especially on Fridays. Have you guys noticed on Fridays, like Palantir like just tends to get a lot more momentum? It's the journey. It's the journey. It is the freaking journey. We are all here because of this one company, because of this one stock. This community is formed because of the execution of this company. The company has embraced the retail over the past few months, and inviting to AIPCon and getting to do all this fun stuff. Like, it's because they realize that individual investors are also the reason the company survived from a stock perspective. When it was $7, $8, no one was really buying besides us, and so it's just been an incredible journey. Absolutely incredible journey. 100 billion market cap in 6 weeks. Yeah, it's amazing, dude. It's amazing. And the other thing I really like about this community and the journey of it is that I think this community has been as real and authentic as Palantir's rise to success. And what I mean by that is that it's just been a very healthy community that has been open to debate, open to discussions. Everyone who has contributed is not saying Palantir to the moon, blah, 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 or Palantir is a piece of shit. It's like a lot of nuance and debate. So even when it was treated like a piece of shit, there was valuable stuff decided. And even though Palantir is currently going to the moon, I don't think you have people just saying, oh, well, it's definitely going to go to 150 tomorrow. Like, you have people that are very reasonable, looking at a lot of numbers, trying to make up justifications for explaining this rise, even if the numbers don't do that. And we're all trying to do this together in a way that keeps people informed, because that's the whole point of this community, is how can we be more informed about our holdings and have a better understanding of what to do with it over the long term. And I think that's what Palantir does with AIP boot camps and how they sell, right? They're like, their whole mission is like, how do we give value to our clients? How do we make sure that it's real? How do we not nickel and dime them? How do we actually produce something meaningful? Rio Tinto just extended their partnership a couple of days ago for 4 years. Why? Because they actually like working with them. Why is this community alive and thriving and surviving? Is because people actually enjoy participating in it through the ups and the downs. And I think that's going to continue for a long time. So there we go. As Chris CRM says right there, it's hard to build this. Yeah, that's the other thing. It's hard to build a company like Palantir, and Karp is working his ass off building this thing. It's also hard to build a community. It's difficult to build a real authentic community that stands the test of time. That, you guys were talking about doing meetups next year, like the fact that people actually want to do meetups and connect. It's special, dude. And Tesla has proven that it is possible to have a retail community and for that community to share in the wealth creating process of the stock market. And I think Palantir so far has pretty much proved it as well. Palantir's not as big as Tesla. And if Palantir has anywhere to go in terms of Tesla's overall reach and valuation, then this journey is truly just getting started. Exciting, exciting, exciting stuff. Josh says Palantir and Tesla, the two biggest moats. I would agree. I put out a tweet a long time ago saying that Palantir and Tesla might just be the best two stock performing portfolio of all time. Maybe it happens. Maybe that will be the best two stock performing portfolio of all time. We're talking about like 20 years from now, right? You put Palantir and Tesla against two other stocks. Obviously, if Bitcoin goes to the moon, MicroStrategy and any other stock is probably going to outperform. But is just really exciting to see the journey that they're on. And look, is it expensive? Yes, we're at $150 billion market caps, folks, 147.5. Is that expensive to pay for a company doing less than $3 billion in revenue? Yes. But, but at the end of the day, stocks don't have to trade purely on numbers. And again, every time I say this, I want to be very clear. I know a lot of you have owned this company for a long time. So I'm not trying to say, oh, it's expensive, but it could go higher, and try to say, oh, you should get in at 64. That is because I've been saying since 35, 40, hey, like, you know, it's expensive at those levels. But when I say, when I add the but to it is expensive, I say that because all of us have been in it for so long that, like, it kind of doesn't matter, right? We're really in this for the long term. And if we're in this for the long term, then all right, we'll be here for the long term. It can go up and down, but there is a shot that it doesn't always have to trade like conventional stocks tend to trade. And again, you pay a premium on stuff that's special. And that's what you got with Palantir. Cool. So Gene says 65, man, what a time to be live. You know, it was so funny with my sister too last night. I forgot to tell the story in the morning because we had so much news, but it was so funny. She came up to me last night. Okay. And this has to do with Palantir. She came up to me and she was like, she found this. So she's not a teacher, but she's an administrator in a school that manages a lot of teachers. And she was like, I found this AI app that builds your lessons plans, can make your like teaching segments, like all the stuff teachers have to do to like teach their kids, right? Like everyone went to school before, you know, teachers have do nows and lessons, all this stuff. This AI app just did everything for it. And she couldn't believe it. She was like, AI can do this? And I'm over here laughing. So like, I've been on this AI train for a while. Like I paid for ChatGPT a year ago. So yeah. So she's sitting here and she's like, dude, it can do this. It can do this. It can do this. It can make this. So I was like, if I was, she was a teacher 10 years ago, she was like, if I was a teacher 10 years ago and I had this, like I would never have to work. Like everything would be done for me. And I was like, yeah, why do you think you're up so much on Palantir? Like Palantir, like this AI, like this is what's happening. And she said, she was like, wait, Palantir. She's like, wait, Palantir's an AI company. Like, get the fuck out of my room. Get the fuck out of my room. I was like, leave right now. She's like, oh, that's why I'm up so much on Palantir? Because I bought her a decent amount of Palantir when it was at 20. And she's like, yes, bro, that's why. Like, yes, it's a fucking AI. Like, AI, yes, that's part of the thesis. And it was so funny because she was like, she finally understood a use case to AI that was real. Again, this is my sister. She doesn't give a shit about the stock market, about technology. She just cares about living her life. This tool that she found on the internet for teachers, AI for teachers, is like, it blew her mind. Dude, she wouldn't leave my room for like 20 minutes. I was like, dude, like, I don't care. Like, I'm happy you found this, but like, you're kind of like, it's whatever. And she was like, you don't understand how big of a deal this is. I was like, no, I do. I've invested in Palantir. Like, I get it. AI is a big thing. And then when she said, so wait, Palantir does AI, I was like, I'm done. I'm actually done. We're done with this conversation. But it's so funny, right? Because why does this relate to Palantir? Well, Palantir is up 10% on the day. Yes, you can call it expensive when it comes to valuation, but the fact that someone like my sister, who's the regular person, there's millions of other teachers who are probably going to realize that AI can help them be more productive. Imagine enterprises, BP, Airbus, Rio Tinto, Tampa General Hospital. You talk about the Fortune 500 companies, Fortune 50 companies on the planet. Imagine how much productivity they can get when you have operationalized workflows via AI, the ontology, on top of their entire businesses. I mean, that's a very, very significant opportunity if teachers are thinking that these AI apps can transform the way they teach kids. So to me, that just proves that the hype is real. The valuation is matching that hype and then some, but it is evident that the entire world is realizing this is significant, and Palantir might be one of the main beneficiaries of this. So, yeah, that was a fun conversation with my sister last night. It was really funny, dude. It was really funny. I know you guys are laughing in the chat, dude. I was like, I know you don't care. I know you don't care that I met Alex Karp. I know you don't care that I talk about Palantir. I know you don't care that I've been talking about it for 4 years. I know you don't care that I invested in Palantir for you. But like, the least I would expect is, you know, it's a fucking AI stuff. Like, there's some AI to Palantir. But nope, she didn't even care about that. Regardless, AI is taking over. Palantir is the hottest AI name in the world. That doesn't mean it's not expensive. Again, this is part of being responsible in this community. It is expensive. I will not say that. It is expensive. If you buy it right now, you got to be ready to DCA because it could pull back, but it also could pull forward higher. We are pricing in a lot of growth. We'll talk about it on Palantir Weekly today. The growth we are pricing in at this point is like over 40% for the next 10 years. I don't know if that happens, but I think if there's any company that has a chance to make that happen, it could be Palantir. And the good thing about it being high, being up this high so much as well. Breaking news: Trump is considering Larry Kudlow to lead the Treasury Department, or the NEC, the National Economic Council. Kudlow is a familiar name to the Trump administration, so that actually makes sense. If it falls back to 45, now that it's at 65, realistically, would people in the chat actually be like surprised? You know, and I think that's the good thing about it going up so much. Like if Tesla went to 420 tomorrow and then Tesla comes back down to 300, I think most Tesla investors, like the Tesla bulls I know, they would be like, yeah, that's Tesla. It happens, you know, like it went up too fast, too quick. Elon Musk himself, as you know, has said the stock is overvalued at times, right? I don't think anyone would be like, oh my God, Palantir's down 65 to 45, like we were when it went from 25 to 20. Like 25 to 20 was a death blow in May of 2024, this year after Q1, because all of us were like, oh, we got momentum, and then it got crushed. But 65 is a different level. If that goes down to 45 or 40, I don't think people would be upset. A lot of longs, I think, would be like, all right, I get to buy some cheaper shares and I get to be part of the story for a long amount of time. And I don't know if I'm going to get this dip again, so I'm going to buy that dip. I think 65 to 45 would be a real dip. So I think the good thing here now is that if it dips, it's an opportunity. And if it dips, it makes a lot of people's covered calls come back to life. And it also just means that more people are likely to hold the stock for the long term, because you've seen what it can do in terms of going higher. So I think that's kind of, now people are probably still going to freak out. I mean, Palantir was down 3% the other day after hours and people were freaking out. So people will probably freak out, but I think most reasonable people will recognize the long-term opportunity there. It depends on why it comes down. Yeah, that's a good point. Like if it's like super bad quarter or something on earnings, which by the way happens for companies all the time, you know, that is something we have to factor in. If it's just macro, then, you know, if you have cash on the sidelines and you have that macro headwind, that could be a reason to continue to get exposure. Rocket Lab is also up on the day nicely, 7%. It was down 5% in pre-markets. Rocket Lab doing well. Where's Bitcoin? 89. Not bad from Bitcoin. Robinhood, again, holding on, down only 1% on a nasty day. By the way, the Qs were down 2%. Look at that. The Qs are down almost 2.3%. So Palantir is green, but almost every tech stock besides Palantir and Tesla also up 3%, nice 320, are down. Look at NVIDIA, down 3%, Amazon down 4%, Google down 2%, Meta down 3%, Microsoft down 2%, Apple down 1.38%. You've got a lot of people selling off tech today. I don't really know the reason why. Not fully sure why they're selling off tech, but they are selling off tech. And a little bit of rotation going into Palantir, Bitcoin, Tesla, and then SoFi right here up about 1.5% of the day. And Rocket Lab. All right. There you go. There you go. I think that is it for me, folks. I'll be back on the market close. Maybe a close above 65. Hopefully a close above 64 would be incredible. It definitely looks like we will be closing above 60, which is very, very exciting for Palantir. And it's cool stuff. Really, really cool stuff to kind of see how this is playing out. Steve will join on the show. I'm sure Steve will have some comments about Palantir. We'll also ask him about everything that happened yesterday in terms of 13Gs and 13Fs. And Palantir Weekly will be on tonight. Now, what time is this Jake Paul thing happening? What time? Because I know a lot of you guys want to watch that. Maybe we do Palantir Weekly a little early before that. You guys know what time is Jake Paul? It's like 8 p.m. Oh, no, that's perfect. Palantir Weekly is at 11 p.m. Okay, perfect. So we'll be live 3 hours after. All right, cool. So for those that want to watch Jake Paul and Tyson or whatever, you can watch that. Oh, Pacific? Oh, no, 5 p.m. Pacific. Perfect. 8 p.m. East. Okay. Yeah, that's today. I'm probably going to watch it. I usually don't watch live fighting, but I have Netflix, so I might as well watch it. I think they're like 2-minute rounds, though, so I don't know how long it is, but did I say Jake Powell? Did I say Jake Powell? Dude, if you're going to be a stock market content creator, you just like, this is what happens, bro. I said Jake fucking Powell, bro. Like, this is what happens. This is how obsessed you get, bro. It's like, it's 24/7, bro. It's 20. I said Jake Powell. Dude, rewind. Someone clip that. Someone clip that. Post it on Twitter. Jake Powell. Holy shit, bro. I replaced Paul with Powell because this guy is on my mind 24/7. It's wild. All right. We'll be back. Market close. And then Palantir Weekly tonight. We'll have Steve on the close. and we will keep going from there. Thank you, everybody. Love you guys. Congratulations. Palantir 64.65. I'll see you guys on the market close in a couple hours. Bye, everyone.